Good morning, everybody. Welcome back to another episode of The Market Open. Thank you all for being here. We are live. It is Thursday, August 13th. I'm sorry I'm a little late, but we are here. We are obviously in a little bit of a new setting, and that is because the electricity and power in my apartment is out. It was out last night on the market close. It continues to be out this morning. You know what's funny about it? It's only one room in the apartment, which ironically happens to be my studio. Like, it's everything else in the apartment is fine. Power works. It's just that one place where I have my lights and cameras and all that stuff. That's the part that's not working. So it's kind of weird that it's literally in that one place. Maybe it's because I had too many things plugged in and there was a fuse or something. But yeah, hopefully that'll be fixed today. Because that's not fixed, we are here right now downstairs in this like studio area. And yeah, we got a lot to talk about. I can't stream in the kitchen, dude. I tried streaming in the kitchen before. It's there's an echo because it's like I think I did it like a couple months ago and it was just like the audio is horrible. At least here there's like it's like padded really well with the foam that keeps the audio crisp. So anyway, we got a lot to talk about. We got a lot to get into. Yesterday was a crazy day, and I think a lot of today's discussion is going to be about the aftermath about what happened yesterday. I mean, before we get into any of the headlines news, we had PPI data today. PPI data was actually really good. The market's not reacting like I think they should be reacting to a positive PPI print, like a completely positive PPI print, but we'll talk about that. I just want to know, how does everyone feel after a day like yesterday? I mean, it was one of those days, obviously, Nebius 30%, CoreWeave 20%, you had Bloom, Intel, Micron, like all the names that have not been participating for the past couple of weeks ever since the Leopold liquidation are participating. Nebius closed at 259 and got to 265 at one point. Right now it's at 250 in the pre-market, giving back a little bit of those gains. I think that's relatively healthy and normal. But these names, you know, SK Hynix was stuck at 130 for a couple of weeks. It bounced to 154 yesterday, up 9%. IREN, which has some really good updates in the pre-market, we'll talk about them. That's up 5%, kind of compounding the good news when it comes to neoclouds. It's one of those things where it's like, my goodness, this has been just an incredible 24 hours in terms of experiencing what has happened. Many of these names are still down significantly from their highs. You know, Nebius, I think the high was 298. It's at 250. So it's still down. It's not down as much as it was before. But the rebound that I think we've seen on some of these names was quite incredible to see. Having said that, the momentum on the way up is also the momentum you have on the way down. And the momentum we had on the way down in the past month was obviously painful. And I think now you're starting to recover a little bit of that. But the number one question I have, and that I think everyone else has that's invested in some of these names, is, was that momentum real? Was that a one-day jolt and burst of excitement that's eventually going to get faded away because ultimately the shorts will double down? Michael Burry doubled down yesterday. We'll talk about his logic behind why he shorted more Micron, Oracle, and Nebius yesterday. Or is it going to be something that, like, you know, people will try to double down, but the earnings results will be so undeniable, which, once again, I don't think Nebius pumped because you know, a bunch of retail investors got euphoric yesterday. It's like the stock was stuck for 3 weeks until they put up some of the best earnings you've seen in the neocloud space. Same thing with CoreWeave. And then the market reacted, and that is reflected in the price targets today. You got a couple of price targets getting Nebius up to $340 from the street. I think you're starting to see a little bit of a potential sentiment shift back into the AI name. Cisco, unfortunately, down 17% or 7%. Cerebras down almost 17%. Both of these guys had good earnings, just not like rockstar earnings, and that's why I think those stocks are taking a bit of a hit. Cisco was up 60% for the year. Cerebras was, you know, it's like $70 billion company with less than $1 billion in revenue. Obviously, the multiple's probably up there. But the actual earnings themselves, the guidance, same thing with Coherent. I mean, the numbers were really good. It reminds me of Lumentum. It's just the stock price reaction. Coherent also was up a lot year to date. So these names kind of giving back some of the gains they've had this year and consolidating is not that crazy. But the overall momentum in the semi space in general, I think, has been pretty exciting. And we're seeing that right now. Yeah, do we trust this run? I think that is the question, and that we don't know. Oh, AMD files for debt security offering. Does the market like that? AMD flat. Okay, so we don't know how much. That's not equity dilution. That's going to be debt. There's a couple companies that are actually raising money this morning, and we'll talk about that. Accelerate did it yesterday. The market was able to digest it. Looks like AMD here today. We also have some updates on 13Fs and the super investors. Bill Ackman is back. I could not believe the new positions that he posted. I mean, 5 of them were very believable. One of them was not, because it was a position he had a fling with back in 22. You know, the fling cost him $400 million, but he's back. And I thought it was very surprising to see his logic behind it, but we'll talk about that as well and why he did it. Yeah, it seems like many people in the comments are just like, it feels good, but it's also one of those things where it's like, is it sustainable? That is the question that I think a lot of people are saying. I'm not in a UPS closet. It's like they call it a podcast studio. I've never seen anyone record a podcast here, but like the audio should be really crisp because of all the padding they have in here. And I purposefully chose to not sit where I sat yesterday because apparently wherever I sat yesterday, like didn't show the top of this structure. And so my dumbass thought it was normal for me to sit in front of this. And given what you guys already think about me, the comments on the market close were obviously what you can expect. It's a mic because we're in a recording studio. It's not what you guys thought it was. It doesn't even look like what you guys thought it was to be. It really doesn't. So took action to sit in the right direction. Anyway, all right, let's get into it. We got a bunch to talk about. First of all, PPI. PPI came in better than expected. Here were the results, and this is how I think the street might end up reacting to it.
1,777,000. How does that compare? Well, last month, the slight revision that above 1.8 million now goes back below. So now we have the string of 1.7s continuing. Now the inflation numbers. Headline number. Final demand month over month expected up 0.2, comes in lower. Only goose egg 0. That would be the highest rate of inflation because last month was negative since it was up 0.6 in May. So better than expected there. And as I said, -0.3 last month now becomes -0.1. Let's strip out food and energy. Comes out up 0.2, 1/10 lighter than expectation. Strip out food, energy, and trade. This one's a little warmer. We were expecting up 0.3. It comes up 0.4. That would be the highest since it was up 0.8 in May. Now let's look at the year-over-year numbers, shall we? Year-over-year final demand headline 4.7, 0.2 less than expected, and in the rearview mirror 5.5. So a big sequential drop. 4.7 would be the lowest since it was March when we were 4.3. Ex food and energy year over year expected to be 4.1, comes in a little warmer at 4.2, but still 0.5% less than 4.7 in the rearview mirror. And finally, ex food, ex energy, ex trade, expecting 4.6, 1/10 out at 4.7, and in the rearview mirror, 5.1 becomes 5%. So
the numbers actually were pretty decent. I mean, the street thought it would be 4.9. We came in at 4.7. Year over year, year over year, 4.7. Month over month, they came in at 0 versus 0.2. PPI core 4.2 versus 4.1. So that was a little bit higher than expected. And then core month over month came in a little bit lower than expected. Now, not saying these numbers are amazing. CPI numbers also yesterday weren't amazing. They just came in line with expectations, which is what the market really wanted. At least we weren't ahead of expectations. The broader problem here, and this is why I think Beth Hammack, who's one of the Fed presidents, posted a post on LinkedIn yesterday about why we have to raise rates right now, is because inflation is accelerating. It's just not accelerating as fast as the market thinks it's accelerating. So if we came in at 5% or 4.9 or 5.1, that would be really bad. We came in at 4.7. The problem is it's still 4.7. It's lower than what the market wanted, which is why like stocks are relatively stable right now. If it was higher, it would be a bloodbath. But it's still not good, right? You know, the Fed wants 2%. We're nowhere near that. So I think you have a contingency of the Fed that's like, look, even if oil comes down, we're looking at the odds of us actually combating inflation in a meaningful way, or AI being deflationary, all these other sort of natural arguments. And we just don't believe that's going to be the case. And as a result, you had 25% voting on them in July. What happens if it's like 50%? What happens if it's 75%? I mean, at some point, there's going to be a consensus that has to be reached among the Fed. And they might end up freaking raising rates. And the thing that was, interesting about this today is like probabilities for a rate cut have come down again. So yesterday it went from 40 to 38. Today, after this PPI data, it came to 32. So if the Fed were to actually hike in September, which again, I don't think that's going to happen, but let's say they do. Bank of America, by the way, came out and said, we think they're going to hike 75 bips this year. So Bank of America is saying, yeah, we think there's going to be 3 hikes this year. And we'll listen to some of their analysis on this, but I mean, I couldn't believe that that's their take. And if that were to happen, I mean, I don't know what's going to happen to stocks. I don't think they would necessarily go up. But the fact that the Fed future probabilities are reducing the rate probabilities again 2 days in a row, this was 65% last Monday. I mean, from that angle, it makes you feel like a hike in September is unwarranted, and that even if some people want to vote for it, it's not actually gonna happen. S&P not going too crazy based on the PPI data, even though it's not amazing, 0.23% of the pre-market. We were very close to an all-time high yesterday. We kind of stayed within a range of 770 to 773. If we can break out to 776, all-time highs are on the way. The problem is the semiconductor names are not going to do it. I mean, Micron is like top 10 in the S&P, so Micron having a really good day could help us get over the edge. Same thing with NVIDIA, obviously, but CoreWeave, SMCI, Coherent, Lumentum, like these names are just such a small percentage. Some of them are not even in the S&P, so they're not really going to make a dent. NVIDIA right there, 223 as well in the pre-market. Tax cut headlines are not good for long-term debt. That's true. I also think the probability of those capital gains taxes being passed is probably not going to happen. So, you know, if that did happen, maybe that would be an issue for our 10-year and bond yields, et cetera. But unlikely that they would actually get it passed. By the way, oil is down. I've been trying to look for a headline for why oil is down this morning. I can't find it. I would imagine the Iranian prime minister said something, or foreign minister, the Pakistani foreign minister said, but like it's actually nicely down 3% with PPI coming in lower than expectation. So theoretically, the macro backdrop is set for the market to give us some love when the market opens. The problem is we had such a big day of momentum yesterday that maybe we're gonna have to give some back, and that might end up being the healthy way for how this plays out. Yes, SanDisk Investor Day is also today, so that will be something to keep an eye on when it comes to the memory stocks. That is fair. Small caps are at an all-time high. IWM is not pricing in a rate cut, which also leads me to believe that it just feels unlikely that the Fed would actually hike rates. Okay, some of the earnings that we had, and then we'll get into some of the macro news. Ondas, they reported numbers. Stock was down 9 at one point. Now it's down 3, so you're seeing a little bit of recovery. I believe they miss on EPS. They beat on revenue. They missed by 90% on EPS. Street wanted negative 10 cents. They came in at negative 19 cents. Revenue, 83 million versus 67 million. They beat by 23% on revenue. Ondas is still a very small company early in its growth trajectory. The defense budget has reinvigorated a lot of people's excitement for what the drone stocks and what the defense stocks in general could look like. They have a gross margin of 50.4%. Adjusted EBITDA also came in 20 million worse than expected, 50 million versus 32. Revenue, they're guiding for 550. Street wanted 509, so they are beating on the revenue guide. And then their backlog continues to be strong. They have 1.4 billion in cash. They are buying a ton of these other companies, kind of consuming them and becoming a conglomerate as a defense company writ large. But yeah, I mean, these numbers are not like unbelievably massive, and they shouldn't be, right? Time will tell to see how well they can grow and continue to operate as a major player in the defense space. But this is kind of the time, if you believe in an Ondas, that you take that shot on them. $5 billion market cap, down about 3.5%. NVIDIA is up a little bit right here. SPY's up 0.2, and then Micron is down 0.2 as well in the pre-market, which is what we are seeing. SMCI, that stock, which had a decent day yesterday, 19%. That's up another 1%. I think that's probably helping Dell. Dell right there up 3. Wow, Dell breaking 500. I think for the first time this year, Dell is breaking your $500 level. So again, the many of these semi names, just like the strength they showed yesterday was very, very encouraging. I don't think they have to go to all-time highs. Dell basically is at all-time highs right here, but if they can keep that momentum and not lose it, that would be important. The software names fell yesterday because the semi names were up. So software names are up right here because some of the semi names are down pre-market. If that can kind of stabilize as well, Palantir back to 172, up 1% the pre-market, then that would be a strong sign for those names as well. SPY up 0.26%. IREN, let's talk about them. So Nebius and CoreWeave have dominated the headlines over the past 48 hours with their earnings, but IREN did something very important today. And I think the market is rewarding them for that. Nebius also, by the way, announced an agreement with Vantage Data Centers to deploy high-density NVIDIA-powered AI infrastructure in their campus in Wales. The deployment represents the first announced commercial capacity commitment in the South Wales AI growth zone. Vantage Data Centers, by the way, is trying to go public at a $100 billion valuation. So Nebius signing a deal with them is great for Nebius as they're expanding their data center footprint, but Vantage Data Centers themselves, the company, is trying to go public relatively soon, either the end of this year or by the early next year at $100 billion valuation. IREN has delivered Horizon 1 to Microsoft, first of 450 megawatt AI cloud deployments under its 5-year, $9.7 billion contract that they got last September. The site is running NVIDIA's GB300 NVL72 systems. They've also received the exemplar cloud status. Horizons 2 to 4 are due later this year, while IREN continues to target 480 megawatts of AI cloud capacity in 2026, 1.2 gigawatts in 2027. They have about 5 gigawatts of overall capacity, which is something that, you know, the bull case speaks to, for they have more energy than a lot of the other neoclouds. And, you know, that capacity is really where is the bottleneck. And if you have that, then obviously that's what allows you to grow. So IREN right there at 4.8%. It's interesting that the market, you know, hated neoclouds for the past couple of weeks, and Kospi was up last night as well. Yep, that was good for memory names. And now the market's seeing these earnings. Kospi was up almost 4%. It's back to being in a bull market, given it was like basically in a bear market with the drawdown. And I think the earnings kind of changed some of the minds of these neoclouds, right? And given the perspective that the market is having about neoclouds, you're seeing this like overall ecosystem growth that, or a sentiment shift around the ecosystem growth that is a bit more friendly. Now, we've seen this happen in the past. And the question is, once again, is it sustainable? A lot of this, like if Nebius were to go, I don't know, to like 230 today after touching 260, that would still be a massive move from where it was 2 weeks ago. But people would be upset, right? And I think a lot of people, quite frankly, would just be like, dude, I don't need this volatility. Like if this thing can't hold a decent gain and it's gonna, you know, go up or down 30 to 40 bucks, like I just don't want to be in it. And so I think the price action today is going to be really important. Like if it does drop to like 247, which it was at 249 in the pre-market, which is down, you know, almost 20 bucks from 264. Like, do people step in and buy the dip? And if they don't, and if people just like panic sell or that compounds the selling, it makes you think the buying yesterday wasn't that real. And you start to get this level of excitement that starts to die down. And, you know, we saw what happened when that took place in July. Having said that, I mean, Ken Griffin got 5% of this company for 40 cents on the dollar, 50 cents on the dollar, and effectively has doubled his money within a couple weeks on a very, very, very large position, which is pretty incredible. Now, someone who has not doubled their money on Nebius, but someone who thinks he eventually will do that is Mr. Michael Burry, as he continues to double down on his shorts. This was actually very interesting. If you read what he wrote last night, he's going back to depreciation as his kind of core bear case. Robin making a little bit of a move right here in the pre-market at 96. He says, Nebius is what the top of a boom looks like. Depreciation is the main concern, the same thing that extended the dot-com bubble. So his kind of core argument is that the level of his argument is that Nebius not selling the amount of capacity that they could sell. The quote they had yesterday was that we could sell this, but we think we have really attractive demand right now, so we're not going to sell this. But it's not a question of demand. It's more so a question of supply, and are willing to do this. His argument is like all of that pricing power is baked into the front end of the curve, and eventually it will be commoditized. So when you get to the back end of the curve, plus when you add in all the depreciation that you're increasing the life cycle for, it's going to lead to some unproductive results for the overall like sector when it comes to neoclouds. The interesting thing about this, though, is that I think the depreciation argument is like kind of weird because once again, CoreWeave is taking NVIDIA A100s and deploying them for another 3 years. This was a model of GPU that came out back in 2020. In fact, if you look at this chart right here, which I thought was pretty incredible, A100 GPUs since June 22 are up 48% in terms of the price per hour that you're paying. It went from $1.18 to $1.91 in the past couple of weeks, which is kind of crazy because people are still willing to pay for these A100s because, again, there is that much demand that is out there. So the depreciation argument, I think it's just, you know, the Mag 7 have answered this question already. They've already kind of articulated why they are having longer depreciation schedules because they're actually getting value out of the GPUs that they're putting out there. And that is why you're seeing more and more momentum across a variety of these names. Burry also ended up saying that this is exactly like Enron. He commented on the NVIDIA $500 billion financing and basically was like, this is what happens at the top. This is not healthy. This is how it's all going to collapse, and it will be worse than the dot-com bubble. Again, kind of the same arguments. ultimately, I think it will be up to Jensen's capital allocation and the return on investment, particularly the return on invested capital that Nebius and CoreWeave showed is being pretty productive in their earnings yesterday. That will have to compound. And if that does compound, it doesn't look like this build out will have to end up in some massive blowout. Also, I think the dude is just coping, dude. I mean, like, he shorted at 212. He told his 300,000 followers to short it at 212. I'm sure, a certain percentage of them listened to him shorting it at 212. So what do you do when something like this happens? You say, no, you have to double down. You have to average into the position because this is fake. And so at this point, as long as Nebius kind of holds this momentum, the short's just not going to work. Nebius also has a 30% short float. Same thing with CoreWeave at 20%, Iren's at 15%. Like, a lot of these names are heavily shorted. So I think you have a lot of panic covering that's happening right now because people are scared. And until you get like a July type scenario where this thing falls by 30% in a day, you kind of can't unwind that, especially if it's up 34% yesterday. Like, it would have to be a slow grind down, which is just not easy to get. And so, you have some people that are obviously very upset about that. NVIDIA up 0.28% of the pre-market as that continues to go green. What do people think? Was yesterday euphoric, or was yesterday kind of a much needed day after the level of despair that I think we all had to see in July? I mean, I think there were elements of yesterday that kind of felt euphoric, but at its core, it was more so the momentum that people are used to. Rocket Lab down 2.6%. Rocket Lab ended up diluting today again. We'll bring up that in a second. But I don't think, it's not like Bloom hit 300 yesterday. It's not like Intel hit 120. Like, a lot of these gains were like 7, 8%, maybe 10 on the high end. Nebius was obviously the big one with CoreWeave, but it wasn't like one of those crazy days, which I think is healthy because the more you have those days, the harder it is to sustain. And this feels like it could have a consolidated leg up after this move makes its room to be made sense of by the market, and then we can actually go higher as long as the earnings continue to go up. Rocket Lab, $1.94 billion of dilution. It's a at the money or at the market offering. So whenever they want, they can dilute up to $2 billion. They already did the $3 billion at 130 that they raised. So, obviously Peter Beck is recognizing the opportunity, given the stock still trades at a pretty aggressive multiple, to be able to make sure they can raise money because Neutron is not going to be cheap. But that could be something that's weighing down on the stock today. Just the idea of more potential dilution right here. It's not net new dilution. Interesting. Well, yeah, actually companies do that sometimes. They swap the old equity dilution raises with a different one and they get different terms for it. That's a fair point. So, so then the market being down 2% on a already existing $2 billion. That's just the market interpreting the headline as bad when in reality that headline is not new because there's already an offering that they have. They might just have different terms for the offering in and of itself. And companies do that from time to time, a lot of times to pay back sort of existing obligations and get more attractive rates. AppLovin's up 1.8%. I've hit up some people about AppLovin, and I will have some conversations over the weekend. I will have some conversations over the weekend on AppLovin. I think those conversations will be highly valuable conversations on this company. And so I will come back on Monday and let you guys know what I hear. But the people that I'm having some conversations with, they're pretty objective, but they're also pretty bullish. And so let's see. I know nothing about this company other than the growth rates. To show you how crazy the street's becoming on AppLovin, and maybe it's justified because AppLovin is a bubble or whatever. I don't know. But Trade Desk and AppLovin both trade at 15 times next 12 months EPS. AppLovin just grew revenues 53% with 84% adjusted EBITDA margins. Trade Desk grew 3% with 34% adjusted EBITDA margins. Now they're in the same sector when it comes to advertising. So, maybe that stain is still on the sector itself, but that doesn't seem like it's rational. AppLovin's also in the S&P 500. It's a big institutional blue chip name. It feels like it may be having that opportunity where it's like, hey, this is a name where you buy the growth and you let everything get figured out. But if there's something underlying it that's a little bit more, material, and that's something we're gonna have to figure out. So I'll have some due diligence on that over the weekend. AppLovin right there up 1.76%, down from the 500 highs of this year, 800 all time. Rocket Lab, I wonder if that reverses then. If this dilution is similar to what they had in the past, but with different terms, I wonder if the knee-jerk reaction takes it down or if that ends up flipping down 2.87%. SpaceX has absolutely made a massive move from the highs
105 to 146. It touched 148 yesterday. I think momentum about NVIDIA's planning for the 500 billion just means that SpaceX is likely going to, I mean, if SemiAnalysis is right and SpaceX can generate 500 billion of ARR in the next 2 years based on their compute business, and NVIDIA is helping support that with all the levels of ecosystem and infrastructure they're putting into the broader market. I mean, yeah, it does feel like you could justify a SpaceX at these levels. The problem is, once again, can they actually get to that momentum? And you still have 87% of shares that are going to be hitting the market eventually. So are those shares going to be hitting the market at $250, or are those shares going to be hitting the market at 146? Is SpaceX going to buy Tesla? They're going to have to dilute to be able to buy Tesla over the next year. Like, these are all the questions that are there. But the compute business, like, if you think of SpaceX as a neocloud, it makes sense that it ran yesterday, because all the neoclouds ran yesterday. So if you value SpaceX as just a space business, it wasn't that exciting because the space names have been relatively flat. Lunar, by the way, had earnings today, and I think they missed on EPS. That's why they're down 13%, but they beat on revenue. But if you value it as a neocloud, it's like, well, the neoclouds are actually, growing really nicely. And that's why I think the SpaceX investors are kind of latching onto the broader thesis that that ARR goal of compute is not slowing down anytime soon. Oil below 80 would be nice. Yes, it would be nice. Unfortunately, we are not there yet. ASTS down about 1.6%, but we are close. I still don't understand why we're down at 81 today from 84 yesterday, 81.50. But there's got to be some headlines that the market is excited about when it comes to Iran. The VIX is at 14. The VIX is basically at a 2-year low, which is really interesting because, that probably means that the market is very greedy, which is, we're not that far away from extreme greed. We're at 62 on fear and greed. We have not had a super volatile moment that caused the VIX to have this massive market move outside of in July. But even in July, the S&P didn't budge. It was the semis that really kind of made the move. So it's one of those things where maybe, caution is important here, because with VIX that low, protection should be relatively cheap. And that might be the way to kind of navigate some of this market right now. Or do we just say, screw it, we're going to all-time highs, and we get to the next level, 78, 7,900. And if that happens, that'd be very exciting. And the earnings are there to support it, but we just got to see if we can actually end up getting there. Do you think Bloom is overvalued? Yeah, I do. I still bought it yesterday at 217, but yeah, dude, I think this is an expensive stock. I just, there's one thing to say a stock is expensive as a fundamental investor, and then there's another thing to say the stock is down so much that acting like it's going to get more cheap is unreasonable, right? So it's like, yeah, do I think Bloom is expensive? Sure. It did hit 160 though, right? So it did have a pretty big drawdown. 160 was basically a 60% drawdown. So at some point, it's a stock market. At some point, a stock takes a 60% drawdown, there will be buyers that come in. And then you have to ask yourself, why is it expensive? And then you look at their fuel cell technology, look at the fundamentals of all that stuff and say, okay, they can grow into the valuation. They already took a 60% drawdown. Am I going to be the one saying, I'm going to wait for Bloom to go to 90? It's like, you could wait for that to happen. But at the end of the day, that's not really how stocks work. At some point, you have to take a nibble and just hope you can DCA into better prices. And if it ends up going lower, then that is more probably a market movement thing versus a stock specific thing, especially if they crush on earnings, which is what they tend to do. And Nebius is expensive relative to CoreWeave, but again, Nebius is executing at a very high level. So it's one of those things where, yeah, I think it's expensive. I think Intel's expensive. I don't think Intel is cheap at 85 times forward earnings, but it's also down 50% or 47%. So it's okay. At some point, if you're going to take a nibble, it bottomed at 89, bought it at 99 yesterday. If it goes back to 89 and actually takes a 12, 15% drawdown from here, it's like, all right, how much lower does it have to go? And is it a company thing or a macro thing? And obviously what we saw in July was it was less of a company thing for everything. It was more a macro thing that was creating that pain. Okay, let's talk about Ackman. Let's talk about Ackman because he's back. For those that are asking, my apartment lost power, which is why I am in a studio downstairs. And that's why I have this background. Real quick before Ackman, Coherent and Cerebras. Coherent crushed it, beat on the top and the bottom. It's just the stock was up a lot year to date. That's why it's down 4%. I don't think it's something to worry about too much. Cisco, I mean, look, Cisco broke out to multi-year highs, multi-decade highs over the past year. So down 7% has nothing to do with the earnings. I don't think Cisco's a buy the dip. I I mean, maybe it is, but like I think there's a lot of more promising growth opportunities in the AI sector than Cisco, even though we are going through a networking super cycle. I think the easy money in Cisco has been made. And for Cisco to keep up those same growth rates is not going to be the easiest. So yeah, like I don't think it's the most exciting name to buy the dip on, but I also don't think down 7% after it was up 2% yesterday, up 70% for the year is like that concerning. Cerebras is the weird one where I don't get why the street is this upset about it. Their guidance was a bit lower than expected, and their operating expenses, they wanted 90 million. They came in at 500 million. So I think they just, spent so much money, and, obviously they're using that money to grow. Street wasn't happy about that. So that's why they took it down 16%. But I also think this one is like egregiously overvalued, and there's not a lot of logic for why, other than, fast inference, and NVIDIA bought Grok for 20 billion. So that's your comparison. But outside of that, I don't know if their partnership with OpenAI is the reason you would pay the type of premium, 300 times price to sales for something like Cerebras right here. Granted, I don't know that much about the company either, but down 16, I think they'll have some buyers that come in. I don't know if this goes, back down below 200. But it felt more like an OpEx change, not something like fundamental about AI in general that caused it to go down. Yeah, it also ran up a lot, right? And so that also probably created some of the reason for why. Okay, so let's talk about Ackman. Yeah, it's really Nebius's fault for why I lost power. They're building this data center in New Jersey, and I think that's what took the power out, unfortunately. So taking one for the team, guys. I gotta take one for the team so you guys get the gains and the data centers continue. All right, so Ackman's back in Netflix. I saw this last night. Couldn't believe it, even though it does make sense. Pretty interesting. So he invested at $3.50 a share, which is basically like $35 a share, split adjusted, in 2022. He put in $1 billion. He was like, we love Netflix, high quality business. 3 months later, he sold at like 220, and he lost $400 million. And he was like, yeah, we made a mistake. We totally misjudged the business. I think Ackman had a moment of panic, just like every investor does, where he put in $1 billion into a name, had due diligence on it, was very excited about it. And then boom, it didn't work out. And it was one of those things where like within months to take a $400 million loss, and took the money, put it into Google, which ended up doing well. But if he left it in Netflix, it would have been a goated trade. Like, you have some of those trades that's as a hedge fund manager where like you're goated for, right? Like you really like Chipotle, Hilton Hotels, like Buffett with Coca-Cola and Bank of America. Like you have some of these trades that kind of define your career. And if he had held Netflix through those lows and just doubled down, I mean, he probably would have been up 8 to 9x on the position by establishing a cost basis basically at like $15, $20. Netflix ran up to $140. I know now it's at 70, it's down 50%, but still he could have sold, along the way and made a lot of money. So he didn't. He got scared of it. And, he reflected on the time and basically said he trusted his intuition and he didn't want to bag hold something that he felt was the wrong thing to do. So he immediately just, cut his losses. And this happened back in 2022. Obviously, a lot of people took losses on names that they were scared of because the market kept falling. I mean, the S&P fell 20% that year. It's hard for the market for people to be rational when something like that is happening. Here's what he said yesterday. Looking forward, we expect Netflix to compound revenue at a double-digit growth rate, with content costs growing more slowly than revenue, driving continued margin expansion. Combined with a robust buyback program, we estimate earnings should compound at close to 20% annually. We believe the company's current valuation multiple represents a substantial discount for a business with such a strong growth profile and dominant market position. I actually think it makes sense. I know I'm not the biggest fan of Netflix. I know a lot of people here are not the biggest fan of Netflix, like the product. I understand that the stock has been plagued with a lack of meaningful content. Otherwise, they would be adding a lot more subscribers and not trying to get into live sports to like drive engagement. But at its core, Netflix is a blue chip stock. That's a company that not a lot of people are canceling their subscriptions on, even if people say they will. And they continue to compound earnings, whether it's through buybacks or whether it's through overall content spend that leads to content that eventually has some good years. Like 2021, they added 4 million subscribers off one show with Squid Game. Like we haven't had that type of growth again, but if you trust in the management team of Netflix and their ability to get that done and their venture into live sports, I mean, look, it's not the most exciting growth play that's out there, but it is at the cheapest multiple it's traded at in over 5 years. And if they can still compound 20% annually, there's probably going to be some love from it. The fact that the stock's not up 7 to 8% right here means the street doesn't even care that Bill Ackman bought it. It's more so just like, okay, Ackman's in, but like Netflix really has to show us that this company deserves to be a stock that trades at $140. I mean, again, it's down 50%, which makes you think, did it ever deserve to get to $140? And it stayed at that 120, 140 range for about 7 months. So it's not like it was like a fluke for a week or something. It was like normalized at that level. But then as the AI build out started, people just saw so many better opportunities as Netflix's growth started slowing down. So I thought that was interesting. But it's going to be also very important to see how Bill Ackman continues to think of the investment. I doubt he's going to sell this for a long time because obviously he probably wouldn't want to sell something twice. And, he probably thinks this is the best opportunity to get back into a name that he ended up missing out on. It's one of those things, dude, whether you're an institutional investor with billions or whether you're a retail investor, like if you miss a name and like you feel so bad about it, especially if you sold the bottom and then that name drops by like 50%, you kind of want your revenge. And I think right now he wants his revenge by riding Netflix back up higher and ultimately making his money on it. Now, he bought 5 other stocks as well. A lot of these are just blue chip companies. He also bought Visa. He also bought MasterCard. He bought ALC. He bought SPGI, S&P Global, Alcon, and then he bought the Intercontinental Exchange, ICE. So Ackman's not going to like Micron or SanDisk or any of this stuff. He's like, hey, give me the blue chip quality companies that I know. Visa, MasterCard, S&P Global, Netflix, Microsoft, Amazon, Meta. These companies will be around for the next 30 years. I think that is his philosophy. And he's just choosing to say that the market is over allocating to some of the high beta momentum right now and not to companies that, are super important. And, maybe that's why we're seeing Netflix get bought up by Mr. Ackman. So that is what we got with Bill Ackman, and that's why some of those stocks are making a little bit of move higher in the pre-market. Are you actually 5'5", Amit? Do not listen to Tanner. I'm not 5'5". That is fake news. I am 5'7". He said he was 5'11", bro. I don't know if Tanner's 5'11", dude. Like, I think Tanner's a good 5'9", maybe 5'10". 5'11's a little up there. Maybe he is. I don't know. But I'm definitely not 5'5", okay? Like, there's no way in hell I'm 5'5". I know what 5'5" looks like. I'm not 5'5". U.S. 10-year, that's down, 4.6, which is also good. So you got oil down, PPI down, 10-year down. Stocks were up a lot yesterday. We're going to see if that momentum can continue today. I thought you said 5'8". With boots, which is why I love the winter, because, can't go outside in the summer with boots on, but in the winter, no one's going to say anything. That's when I'm 5'8". But without the boots, it's probably 5'7". Dude, Chad, come on, Chad. Chad is like 5'4" is just being disrespectful, okay? Chad's probably like a legit 5'10", 5'11". Chad's like almost 6 feet. Chad's pretty tall. Chad, are you 6 feet? I think Chad is 6 feet. He's definitely a lot taller than me, but I'm not 5'4". That's like, don't be disrespectful. All of you guys in the chat are being disrespectful. It's not 5'4". For the longest time, I thought you were 6 feet. No, a lot of people thought I was like really tall. And then they finally saw me in person or like saw like pictures of me actually standing and they're like, oh, this guy's a short king, unfortunately. But it is what it is. Yes, 6'7" with personality. Exactly. Okay, that's what I thought. Chad is 6 feet. That's what I thought. Oil still down right here at $81. Netflix 76 up a little bit in the pre-market. There was another piece of news I thought that was really important in the pre-market here. Lunar, they missed on revenue and EPS. We talked about that. Oh, Bard, they raised their price target to $340 from $250 on Nebius. So we're seeing some of the price targets start to come in, which is, obviously adding to the momentum that name had. We talked about the Bank of America 250. Oh, this was really important yesterday. So this is going to give the Bears a little bit of firepower here, but it could just be like a short-term move that we're seeing, which is why some people are feeling a little bit more skeptical about this rally. So the hedge funds have sold a decent chunk of tech stocks over the past over the past week. So let me pull this up right here. Institutional investors have sold 21.6 billion of NASDAQ futures ending August 4th. So last week. This is when the hyperscalers and software names ran. Short sales drove the move, accounting for about 72% of total selling. Hedge funds sold about 12 billion, while asset managers sold 7.4 billion. As a result, combined institutional positioning in the NASDAQ futures fell to negative 5 billion, turned negative for the first time since May of last year after reaching the high of 54 billion in October 2025. It was negative last year in May because that was after the April tariff tantrums. And then it was as high as 54 billion in October 2025 because that's when we had peak euphoria before we ended up seeing some downside moves. So you are seeing people take profits. I mean, put in the chat if you're taking profits. Who took profits on Nebius yesterday, even via covered calls? I mean, I would imagine there were some people that freaking like sold after, you know, if you bought it at like 180, 190, like you see 250, you're like, you know what, this is good in a couple of weeks. Like I'm taking some chips off the table. The question is, were the dip buyers yesterday just retail investors that will hold the bag, or were they other institutional investors that are coming in and saying, okay, we need to make our performance for the end of the year, you know, start to be more substantial. You only have a couple months left in the year. We're going to have to take a risk on some of these names. And, you know, these names are still down a lot from their levels, and they're now not falling knives. I mean, hopefully a lot of these names are not catching a falling knife anymore. They're actually recovering charts. And that's something where big money can really bet on if they don't think that something's just in a downtrend. If something's recovering, they can deal with the dips, but they're more happy than not to actually take a chance and put some money in. See a few people saying they took some profits. See a decent chunk of covered calls here. I was looking at the covered call premiums on Nebius. It's kind of stupid, bro. Like people are paying like a lot of money for like 350, 400. But it's, I mean, like, could Nebius hit 300 pretty soon? I mean, it's, yeah, I mean, who knows, right? If the momentum is there. So I understand why the call premium's up there. And now we just got to see if that can ultimately last. All right, here we go. Thursday, August 13th, the day after the best day for semis in the past 2 weeks. We're going to see if the market can hold on to this excitement, this momentum. People takes profits. And overall, if we can start to consolidate a lot more of the gains that we have. Thank you, everybody, for being here. 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. S&P 500, 774. That's up about 0.23%. So we are green on the S&P as we open up the day. Intel, that's down about 0.4%. Lunar, that's down 12% on a miss on EPS and revenue. That stock taking a bit of a hit. SpaceX down about 1.2%. Robinhood, this thing does not deserve to be below 100. I don't get why it is. Their metrics came out yesterday. Their metrics were also pretty good. Some of Q over Q declines, but overall year over year is very strong. So I think Q3 is going to be good, given the metrics they put out yesterday for July. 96.77, that's up about 1.9%. NVIDIA trying to go for 225, hit 225 in the pre-market, 224.64. SMCI up another 2.4%. IWM, look at that, all-time highs on small caps as that continues to go green. AMD, that's up. SMH, that's up. Micron, 916, that's up. CoreWeave continues its momentum, 1.6%. That continues to go green. And Enovix, that's up 1%. SK Hynix, that's up a little bit as well. Nebius, 262. Wow. That entire pre-market red just got eliminated as soon as the market opened. Palantir, 175. Okay. Software and semis kind of moving together. If we can keep that up, that would be very exciting to see. The Q, 724. SoFi at 18. Palantir 174, Nebius 265, both of them having a pretty massive open out the gate. UNH, that's up a little bit. Qualcomm at 164. Archer, that's up about 1%. Joby, that's up 0.34. Adobe as well, that's green. Wow, so yesterday all the software names are red and the semis were up. Today the semis are still pretty much up. Some of them are red. Some of the software names are red, but it's not like the same, you know, semis red, software green type of dynamic. You're seeing a bit of a mixed balance, and individual stocks within each of the sectors, semis and software, are having the green coming into them, or having people decide that they deserve to allocate more capital to them. Coherent, that goes green after being down 5% pre-market, which is very nice. By the way, the guy that was grabbing his coffee probably heard my bell. This guy was thinking, what the hell is this guy yelling about in this studio? This is not soundproof, by the way. This is not sound. I've heard people yell in the studio before when they talk. So yeah, he was probably wondering what the hell is this guy doing here. CoreWeave 110 up 3%. AMD 485. Enovix 497. The Q 724. Even Tesla goes green. Interesting. Even Tessie goes green right here. Wow. So some of that, I know it's only been 2 minutes, but some of that momentum from yesterday not really stopping. SpaceX trying to hold on. If SpaceX even holds on to 140, I think that would be exciting, which is very green as well. Wow. Is she really going to go to 270? Dude. Michael Burry better double down again today. Goodness gracious, bro. That pre-market dump was such a fake out. Now it's got to hold. It's got to hold. It could obviously flip red, but there you go. 270, 271. Wow. I think it's a squeeze. I think it's a squeezy squeeze. I think it's either people getting really excited to buy back in, or it is an absolute squeezy squeeze, 30% short, getting a bit afraid that they might have shorted the wrong name. 270 right there, up 4.29%. Rocket Lab also recovering. Rocket Lab was down. Even Robinhood, 98. We haven't seen 98 on Robinhood since August 4th. Like, and after the earnings, it never even touched anywhere close to 98. It was stuck between 89 and 94. So the fact that it's actually trying to make a run for it means that maybe that excitement's coming back. Epsilera, I mean, what an amazing performance. Even after they diluted by 200 million, market doesn't care. Market's ready to buy into it. Like, this is pretty incredible for a biotech to A, have those results, and B, announce dilution, and the market to be so impressed that they're ready to buy in. It's pretty freaking incredible. I mean, if you got Epsilera at the lows, it's kind of turning into one of those names where you just let the story ride and play out. And who knows, maybe that is, one of the next big multi-baggers for some people. And, you deserve it if you took the risk. Biotechs are not easy to bet on. Shopify, that goes green. Figma goes slightly red. Air Test Systems is down 9. That's a little weird, given that was up almost 20 yesterday. But that is red. Did anyone have a headline on that? I think that might be dilution. It feels like dilution. AAOI, that's down 1%, or maybe that's a reaction to Coherence earnings. Corning, that's down. Yeah, maybe that's all the photonics names that are down. Amazon, that screen, 268. SanDisk, 1350. Trying to get back to 1400. AppLovin, flip screen as well. SoFi, 1820. Airbnb's at 180, which is basically a 3-year high for Airbnb. ARM almost back at 300. I mean, a decent chunk of momentum as Nebius is trying to go for 272. Wow. That is just unbelievable to an extent. But it also is kind of believable given the stock was basically at this range for a month before the drawdown. So it's kind of just recovering. And look, even if Nebius falls to 240 from here, like if you shorted at 212, at 220, at 230, like it's going to need to fall dramatically for that short to even have a chance of breaking even. Same thing with Palantir, right? The amount of shorts that we're in at around 130, 140. Like, I don't think Palantir is going back to 130, 140 that easily. It could happen. But like, you're going to need a massive sentiment shift. You're going to need a massive macro shift. And we just went through that in March and then in July. Like, for us to go through that a third time this year where everything corrects another 30, 40%. Like, it's not that it's not possible. It's just rare. You tend to get those once a year, maybe twice a year. In 2025, it was really the tariff stuff, and then a little bit in October. But it's not that easy to have that significant of a drawdown multiple times. Meta, 585, that tries to go green. Oracle, 155. Apple at 304. Why did they put the coffee machine near the recording studio, dude? There's too many people getting coffee that can hear me yelling about random numbers on the screen. One of them just walked away, but they looked back at me, and I could tell they were like, what is this guy doing right now? 916 on Micron. That is green. AMD, 490. Can we see AMD at 500 again? Can we see AMD at 500 again? When does the market dump? The market already dumped in July. I mean, the S&P was down 3%. It wasn't down that much, but still. The market, it had the dump. We had the pain. I ran off that Microsoft news today. That's at 47. Like, we did have a dump. We absolutely, I mean, Palantir got to 107. Like, we had those moments of pain. I don't think we need to have it again. I don't think we're like crazy euphoric, but even if we do get somewhat euphoric, which is obviously possible when you have this type of momentum, I don't think we need to go back to those levels. So a dump from here might be, 10, 20% down on these names, but not 40, 50%. Some of those names were down 70%. Like, I do not think we need to revisit that type of downside action. Qualcomm right there, up 1.73% as well. as that continues to go green. Yeah, July was painful, dude. At the end of the day, it's numbers on a screen, but like this is real money. This is, real accounts, retirement savings that people have saved, put into a company that they thought, was going to compound earnings. And obviously you have to be patient, but like, then you buy the dip. You're like, okay, I'm going to buy the dip. I'm going to be a long-term investor. The company's executing. I get it to have a better price. Then the dip goes down another 40% from where you bought the initial 30% dip. Like that stuff psychologically, it messes with you, dude. You start to feel like you're losing your mind, right? Like we all went through that. We will all continue to go through that over the coming years. But it happened this year, and it happened twice. It happened in March as well. So it's like one of those things where, like, does it really need to happen again end of year like it usually does around this time, or have we already had enough pain for the year? And time will tell. But it's one of those things that a lot of us have to experience. S&P is very close to all-time highs. As I'm saying this, we're literally 50 cents away, less than 50 cents away from hitting an all-time high on the S&P as CoreWeave continues to make a move. 6%. Wow, CoreWeave is getting some of the love that it didn't get yesterday compared to Nebius. Nebius outperformed it by about 10%. CoreWeave's filling up the gap right here. 115. The stock was $58. Whether you got it at 70, 80, 83, 77, 65, I mean, all of those buys are green massively. Even if you got it at 90, at 115, and it was stuck at 90 for a couple of weeks as well. Like, this is just a pretty massive explosion for me. SMCI stuck in the 20s. Now it's basically doubled in a month. It's down from 50 at the highs, but the market cap's 25 billion. They're guiding for revenue of 75 billion. So there's obviously an opportunity there of arbitrage, and the market is starting to potentially recognize that, even with the issues with management. That stock's up 4%. Dell's up 1.3%. Micron 922. That continues to go green. AMD 494. SMH up another 1%. All right, so momentum from yesterday is continuing in the first 10 minutes of trading. That momentum is indeed continuing here. Did we hit 100 on Hoodie? Did we get there? Okay, we're 3 cents away. Literally 3 cents away. Let me check resistance. I don't think there should be much. Yeah, there you go. There's 100. Yeah, this one was kind of inevitable to me, honestly. This one, like, you can't have the market rallying at all-time highs and Robinhood stuck below 100. Now, granted, she's been moody. She's been very moody. So I don't know if we saw her run to 120 2 months ago before the drawdown. I don't think it's crazy to see that happen again, but it's going to have to actually hold on to some of this stuff. The risk we have right here is everything's at all-time highs, or at least I should say the indices are at all-time highs. So if some type of greed steps in, it's not like we have to have a March type of drawdown, but we could have a drawdown, which means buying into strength, gets punished, even if you're still up on the name. And I think that's the cautious element that, we can't forget about. But the earnings picture is not the reason to necessarily be upset. Nvidia, we touched 227. Wow, they actually let her get above 225 today. Interesting. Yeah, Nvidia making an incredible move right there. VIX continues to go down. Where is the VIX? We were at 1450 yesterday. We were at 1447. So it's down a little bit, but still well below 15. As that continues to go red. AMAT is earnings are today. AMAT is today after the bell. Is this at all-time highs? I think it is. It's close to it. No, all-time highs was $739, and that was in May. So this one's still down meaningfully from those lows, but it did get to 545. Or actually, what did it get to? It got to 435. Yeah, so after the bell, we'll see what happens with Applied Materials. SMH is still far from all-time highs. Yeah, it's still about 11% down. Inflection, they had a good earnings yesterday. The stock was down like 5%. That stock now is up 3%. So you're seeing some of your quantum names recover. How do you think Leopold feels? I think it's got to be a tough feeling, dude. It's one of those things where it's got to be one of those things where you just move on with life. I mean, every position he got liquidated on is up 40% from the lows. Some of them are up 70% from the lows. I mean, it's tough, man. It's the nature of markets, right? If you can't stay solvent, wow, Bloom 6%, 250. If you can't stay solvent, you can't play the game. it's just, it's got to be tough, man. I think people have been in that position on a smaller level. Either you sold a stock too early or you ended up getting margin called. But, when you get margin called for $30 billion, that could have right now been almost 70 billion based on these stock prices. And, you took that 70 billion up from 220 million in 2 years. Like, he would have made the argument for one of the greatest investors of all time. He would have put in the argument for one of the single greatest, because Buffett has never compounded like that. Like, Druckenmiller never compounded like that. Like, he really, and if he could do it for the next like 5-7 years, have a 10-year stretch of like 70% CAGR a year or something without using quant strategies like Jim Simons, but actually like picking stocks and developing a thesis. Now, what helps you get there is leverage. What also might take you out of the business is leverage, unfortunately. So it is tough to see. But nonetheless, for those who got the dip from that deleveraging event, these names have done very well since then. Oracle, which Burry shorted as well yesterday, that's up another 2.3% as that continues to go green. Granted, I don't think he's going to be gone. I think he's going to be here for a long time, and he will be back and be making investments. It's just the type of leverage he used to, get to where he was a few months ago is likely not going to be used. Iran, can we see 50 today? Let me check resistance. It would only make sense for Iran to follow CoreWeave and Nebius and really break through a psychological barrier. For CoreWeave, it was 110. For Nebius, I think it was basically 250 was the big level. For Iran, I think it would be 50. Resistance at 50 is 73,000 shares. 73,000 shares for $50. Coherent is Coherent up? Coherent, did we flip? Coherent is flat, but it was down a lot more. Hoodie just below 100, but trying to crack above it. Nebius just below 270. Chipotle up 2. Kava still up 2% as well. Microsoft just below 500. Where are the Mag 7s? Amazon is still up. Google, which has a billion monthly actives on Gemini. Also, Google had some more leadership changes yesterday. So I think the market's just trying to make sense of it. But 344.79, that is basically flat, but not falling the way it did last week. It also helps to be young during the largest and most obvious economic catalyst in stock market history. Yeah, I mean, the guy's 24. So being able to have that much time to let your stocks compound, especially when, it is like, arguably the greatest opportunity to invest in assets because of the industrial build-out we're seeing right now. It's just being able to navigate the market dynamics of leverage is a different question. NVIDIA 225. So like NVIDIA is the one that really hasn't shown up to the party. Now 225 is amazing, but I think all fair estimates are like this thing probably deserves to be 250, 275. I still am a bit skeptical on if the street actually lets it get there. I think at around 235, 240, which is its previous all-time high, the market starts being a bit funny. But if Jensen comes out and says 110, 115% growth, gross margins continue to go higher, like, why shouldn't it, why shouldn't it get there? Granted, I think the market would probably have to crack 8,000. So the broader market would have to be happy about this. Ed Yardeni raised his price target to 8,400 yesterday. So he continues to be relatively bullish, and now it looks like 8,000 is becoming kind of a baseline expectation for market participants versus like a bull case expectation, given we are pretty close to it. Hertz is up a little bit. Krishna said I took some profits on CoreWeave and Iran. I mean, taking profits today is not crazy. Bloom. Okay, I'm up 15% on Bloom. $1,500, bought 50 shares yesterday. I mean, I didn't really have a target for Bloom, to be honest. I have a target in my head for Intel and DRAM. For Bloom, it was kind of one of those things where it's like, I think this one, in the context of momentum, has a lot of room to run because just how volatile it is. See, this is the hard part. It's like, okay, you're up 15% in a day. Do you take profits, or do you say, well, Bloom is still down a lot and they keep executing, and if it actually goes down below my cost basis of 217, I'll just buy more and it's a great quality company, This is why it's always tough to take profits. It's one of those things where you have to mentally be ready to take profits before you get in the position where you actually take the profit, because then you might not ever take it. Or that might be a good thing because if not taking it allows it to compound. But yeah, I don't think selling Bloom right here needs to happen. The Brookfield deal, the Oracle deal, the earnings I mean, if you listen to the call, I actually listen to the call, every new deal they're getting is with a hyperscaler. I mean, if they announce 4 or 5 deals next year from Amazon and Google, and those guys really need new forms of energy and technology because natural gas and oil is not enough, solar is not enough. Bloom is kind of one of the only players that's out there that I can actually do it. I don't love the valuation, but they have a moat, like a real moat. Palantir, 175.70. You're seeing some of the software names come back, particularly Palantir, as that's up 3%. All-time highs on SPY. Did we pass it?
Wow, there it is, folks. There it is. The S&P 500 has officially hit all-time highs.
It's a good bell. That might have to be the new bell every single day, to be honest. It's not as loud, it's calm. That's a good freaking bell. 776.80 on the S&P. That's incredible. Jose said yesterday, it sounds like something you'd ring when you say your food is ready. I was like, bro, that's my stocks are ready. They're greeny green. There you go. Coherent 356. NVIDIA 225.50. NVIDIA is actually going for it. 227 maybe back on deck. Robinhood trying to get 100. Nebius not giving up 270. Zeta also coming. Oh, by the way, there was a quote that the Zeta chief operating officer said at a conference yesterday. This quote was crazy bullish. Let me see if I have the quote right here. Yeah, Zeta received a call post the Palantir partnership from a very large U.S. bank, which they were trying to get more parts of their business. The large bank wanted to meet with Zeta explicitly after the Palantir partnership to discuss more of opportunities for them to engage with each other. The CFO said that at the 46th Annual Growth Conference from CG yesterday. That is why that Palantir deal is so bullish for Zeta. And that was part of the reason I got excited after that deal, because when you're partnered with the hottest AI name in the world, people take it seriously and they want to, call you up and say, hey, this Palantir partnership, what are you guys doing? How can we work together? How can we become more efficient? Is there any opportunity here? And that's where you close deals, right? That's where you actually close big multi-year long commitments. I would imagine there's not just the US bank, but there's a lot of other clients because of that Palantir partnership that are going to hit up Zeta, and that should allow them to compound, which is why I think Steinberg didn't include the guidance for that Palantir partnership in their growth curve, because it's probably going to take some time to see what those deals look like. But I mean, that guidance could continue to accelerate that 30% organic growth over the next few years, which should obviously be very, very exciting. 776.91 on the S&P as we're making a move. Path, yep, that's moving a little bit as well as that continues to slightly go green. Palantir 176. Micron also coming back. The memory trade, which has been basically dead for the past couple of weeks, 937. When's the last time we saw 937? Last time we saw 937, early August for a brief moment. Realistically, it was end of July. And then it went all the way down to 700. So it's been about 2.5 weeks since we even thought about 940, 950 on Micron, which feels like it could happen. Okay, thank you for the super chat. Really appreciate it. Thanks for Market Open every day, Amit. If you ever feel the market is overheated, which hedge strategy would you prefer? Selling covered calls, trimming, buying short-term puts, or just short? I would not short. Shorting is something you have to do, I think, on a very specific basis if you feel that, exactly when to get in and out of it. I actually had a friend hit me up yesterday who's shorting SpaceX, and his argument was, dude, I love SpaceX, but this market is running super hot. I have a lot of high beta exposure. If my short on SpaceX ends up not working out, that means the rest of my portfolio must be going crazy. So I'm happy to put some money here, short 100 shares of SpaceX. And if I end up, losing 40, 50 grand on it, then I know the rest of my portfolio should be doing well. So that's how I think about shorting as a hedge. But in general, there's a lot of complications to shorting. It's not the easiest to do it. And obviously you can have infinite losses when you short. So that would be my way of hedging. My preferred way is just selling covered calls, to be honest, because I think selling covered calls allows you to do the trimming because you're forcing the market to take the shares from you. If I sold Bloom covered calls at 275 today, if Bloom actually runs to 275 by next week or next month, I get a pretty big gain. I don't have to sell at 247 and I get some premium on top of that. And, that's how I take my profit. Now, if Bloom dumps to 150, the 275 covered call is not really going to protect me. And it would have been nicer to actually sell the stock. So that comes down to like a case by case basis on, do you actually feel the thing is getting so overheated right now that it's making you uncomfortable? But my favorite way to hedge, which is not really a hedge unless you like sell them in the money, but is likely selling 10, 20% out of the money calls a month out and then just seeing where the stock goes from there. Wow, S&P 777. Goodness, bro. What a 2-day stretch as we get towards the end of the second week of August right here. 777, maybe 7,800 is on the way. Maybe 780 is possible right here. NVIDIA is still above 225. I think NVIDIA and Micron are causing this because the Max 7 aren't really doing much for the S&P here. Marvell should be up today. Marvell, that's up 3%, 224. Hood is also in the S&P. Are we back at 100? We are. There we go. Back at 100. There she is. Got to keep this above 100 now. But we are back at 100 today. Micron 934 as that continues to go up. Greed's at 67. Really? Did we get to 67? Wow. Okay, so this is the part where, that question about hedging is pretty timely here. I wouldn't buy puts, by the way. I tend to... Buying puts, you got to be strategic on how you buy puts. You have to compare the deltas on the puts. If the put actually goes in the money in a certain period of time, you have to compare the theta on the put to know that you're actually making money, which is actually hedging. I think most people aren't the best at that. And then shorting, most people aren't the best at. So really it would be selling a covered call or trimming. But look, this is the point where, we're a couple points away from extreme greed. I mean, as much as I hate to say it, are asset prices getting a bit inflated right now? And once we get to extreme greed, which is, maybe another 1% away from on the S&P, maybe less than that, is that when the market needs to chill out a little bit. Conventionally, you would say yes. The problem is we just went through a July drawdown, which means practically, I don't know if that has to happen, which is August is it's kind of looking like 2025. August and September were really good in 25. And then October was bad. Usually August and September are bad, always. It's why Robinhood's worst quarters are Q3, because August and September trading volume just dies off. Maybe that changes this year, and then we just have to be ready for October, November, but maybe it's not as scary going into these 2 months before we get to the end of the year. Micron reports earnings in a month. I doubt they would start running it up this early, would they? Well, Micron slowed down a lot from 1250, right? So, yeah, I think Micron has less to do with earnings. I think it's about Micron is the classic momentum play. I mean, if momentum's back, people are going to buy Micron. Like, it is the poster child for Micron. People are going to buy Nebius is the poster child. People are going to buy Bloom. It's one of the poster like those three names will be the names that get your 10, 15, 20% days, but they will also obviously get the really ugly drawdowns. It's just maybe we don't have to see those drawdowns if we already had it. When is the rug pull? Dude, this is how triggered we all are. This is how on our toes we are. We're all just like, all right, when is it over? We can't even enjoy the green anymore. We're just like, just tell me when it's over. Let me be prepared for it. Let me rip off the Band-Aid. Intel at 105. Let me know when to expect my money to just disappear into thin air again. Thoughts on Big Bear AI? They don't have substantial growth. They have some really interesting contracts in airports, but the growth is not really that exciting. Small company though. So, if they re-rate their growth, then $1.5 billion is probably going to be cheap, but like, it's just not super, super exciting levels of growth. But I think it's a good company. I actually saw their product in was it the Singapore airport? It might've been the US airport. Well, it might've been the New Jersey airport, but I saw their logo and I was like, oh yeah, Big Bear. It's just, the growth rates haven't reflected massively. Marvell 225.70 as that continues to go green. Trump has not tweeted all day. Yesterday, he tweeted something about Iran that didn't really affect the market. Let's see if you had Iran say anything. Someone just bought 450,000 in Marvell calls, 290 expiring in October. Sandisk CEO, we're getting some quotes from him, says the company is committed to mid to high teens volume growth at the investor day. We'll see some of the other stuff that they said. 8 million of calls just came in on the queues. My goodness. 8 million of net call premium just came in. Iran this morning, I think they did say something. Iran's top joint military command says no vessel can travel the Strait of Hormuz without Iran's permission, adding that no ship can safely pass through without approval, according to state media. Okay, so Iran continues to make the argument that the Strait of Hormuz is closed. That's fine. Market's obviously not reacting anymore. Wow, S&P, dude. We're almost about to be at 778. This is like, I wonder, is this institutional? Is this retail? Is this short covering on the S&P? Like, is this big money coming in and it's saying, all right, it's time. Like, we went through our drawdown. We're going higher. I mean, the S&P now year to date, hold on, I think we're passing like 14%. 13.8%. I mean, dude, last year we did 16, right? S&P performance in 2025. It was almost like 20 until the end of the year. It was 16.5% last year. We were at almost 80% of last year's gains, and it's July, which can either be interpreted as scary because it means we've gone up way too far, way too soon, and we need to be ready for a drawdown again. Or it's like, no, the drawdowns early in the year and the one we just had were the foundational elements for why we're going to bust through 16, 17, 18% by the end of the year and potentially have, a massive fourth year of this bull market. AMD continues to move as well. I mean, AMD probably 500 should be on deck. It's $5 away, dude. 430 to 500 after the earnings. I ran almost 49. Not a bad week compared to the past couple of weeks. Why is everything pumping? What did I miss? There was no actual headline. There is no actual headline. I don't think there is. Did I miss a headline? No, there's no actual headline. There's just this freaking earnings excitement from the neoclouds, I think, that's carrying a lot of this. Marvell 227 almost, NVIDIA PPI. Yeah, but the thing is, the PPI wasn't that, it was good, but it was, we're 4.7 is still a pretty ugly number. It just wasn't 4.9. So it's one of those things where maybe the market's just like, okay, it's bad, but it's not as bad as we think. And we hope oil comes down enough for it to relax. Which maybe was part of the reason the market said, all right, that means we have to buy stocks if inflation is not as horrible. What platform do you use for day trading? I use TradingView. And I connect it to a Tasty Trade account. And that's what I use. Could it be institutional investors coming back in? Yes, but some of the data I saw last night that we talked about on the show is that institutional investors have been selling. Now, you always have to take that with a grain of salt because, institutional investors are a massive, massive part of the market, and there's various pieces of data that define what they're doing or not. But there's definitely, them taking profits. So I don't think it's all net buying. Although when you see a day like this where the S&P is about to hit 778, actually we did 778.01. Wow. SPX is at officially 7,800, folks. There it is, officially 7,800. That doesn't feel like retail. It does not feel like retail. That feels like the algos are in control. And you know what it could be? It could be CTAs as well. It could be CTAs, the commodity trading advisors. And we talked about this back in end of July, which is that every scenario over the next 3 months points to them systematically buying again. I mean, Citadel came out and said, we think systematic buyers will be coming back. That sucks on the downside as well, which is what we experienced in July and in March. But when the CTAs are back, I mean, you just have hundreds of billions every day that are forced to systematically buy, which gets you into the extreme greed type of moments. But the point is it creates this type of buying pressure. Yeah, even Meta is up. Is the volume on SPY low? So SPY... Yeah, this is crazy, bro. This is happening on 4 million shares of SPY. The average volume is 80 million per day. I mean, we should be closing in on like a lot more than 4 million shares right now. So that means all the volume is bullish. Sorry, average volume is around 60 million or 55 million. So we're at 4 million. Either way, it should be closer to like 10, 15 by this point of the day. I doubt we're going to get to 50 million by the end of the day. If we do, then that's fine. But every day it's been like 25 to 30 million per day, which is still about 50% lower. Yeah, crude is also down. What you're saying is this is all fake. No, I'm not saying this is all fake. I'm just saying like the volume that's coming in is buying volume, you know? And so, yeah, when we might get more volume, you might see some selling pressure, which is inevitable, right? That's kind of what happens. But it's not just today. It's been like the S&P is up like 4% this week. So it's like whoever came in decided that they wanted to buy. And as a result of that type of buying pressure, again, after a really ugly drawdown, Rocket Lab back to 83. When you have more volume coming in September, August, you might just say, all right, S&P is up. Like we're going to buy into this strength as well. We're not going to try to fight the momentum. Again, the big thing around fighting the momentum is you need to have a reason. And like, if the reason is, I just don't like that it's going up so much, that's not a reason. If the reason is earnings are bad, that's a good reason. That's not what we're seeing. If the reason is AI is a bubble, that could be a reason. But obviously, if the earnings are really good, maybe AI is not a bubble. And so that's not the best reason. So then the question has to be, is there over supply of leverage in the system, which would be a reason to go short or a reason to fight the trend, which is exactly what happened in July. And if you had that reasoning, you were right, because there was too much leverage in the system. I know it's only been a couple weeks since the recovery from the lows, but like where is this massive leverage? I mean, like, you know, some of these stocks were going up 7% every day for like a month. Like I don't feel that type of euphoria. Robinhood's still below 100. You know, Nvidia can barely get above 225. Like it doesn't feel. Remember, Nvidia got to 240 when things were really starting to top out back in late May. Like you started to see the big guys participate as well, and like things were getting up there. Rocket Lab was at 150. Like we're just not at those levels, which makes me think the correction is also not horrible either. Where is Palantir? We were at 175, 176.50 as that continues to go green. And that's true. We've also had many red days without a clear reason. So sometimes you get the green days without the best reason either, but it kind of balances out all the ugly red. And again, the other reason I don't think it's fake is just like, because I mean, for us to fall 10% from here, like some predictions are out there, what is the catalyst? And if there is a catalyst, S&P is still going. Looks like she wants 779. If there is a catalyst that pops out of nowhere, that's a different question. I don't think it's the Fed anymore, not with rate hike probabilities falling to 30% from 65%. I don't think it's earnings. I don't think it's the Max 7 disappointing. I don't think it's CapEx. I mean, NVIDIA is injecting $500 billion into the system. That should be net bullish more than it is bearish. Over the long term, if that money's allocated correctly, then that should still work out. I don't think it's leverage, right? Like, what is that reason at this point? It's not as obvious to see. Yeah, midterms, sure, but like, what would have to happen? Remember, 2018, the reason we tanked into the midterms is because we raised rates, right? So that there was like a real reason for that. 2022 into the midterms, we raised rates like aggressively. In 22, like there was the big macro catalyst that caused the midterm year to end up being really ugly. Now, historically, the midterm year is ugly. I'll give you that. That's a fair point. And maybe the market just tanks because it's a midterm year, and that's just what happens in the market. And like maybe you ignore every bull thing, and there's no rate hike, but still, the midterm year caused the market meltdown. That maybe that could happen. But if we're not going to raise those damn rates like we did for the past 2 midterm cycles, which caused those big 20% drawdowns, 2018 and 2022. I don't know. Also, 22, we were coming from COVID and, you know, everyone was bloated. You had too many employees. Market had bad earnings. Like you had all this stuff in the system that had to find its way out. Stop looking for reasons. Enjoy. We can't enjoy it. We need to overanalyze why we have this green. Every time we sit back and enjoy, the fear of it going away comes through. Why are you in a closet? My apartment has lost power. Also, for people saying you just have to like flip on a switch, and I tried doing that, dude, because this has happened 2 times before, and that didn't work. And also, I if that was the reason, the entire apartment would not have power. That one room, like, I don't know what happened in that one room, but I don't know. Hopefully I get it fixed today. But it was weird. I was just sitting there, and then boom, everything just turned off. And flipping the fuse on back and forth didn't really fix anything. Nebby is still below 270, 268 right there. Did you pay the bill? Yeah, I paid it because like the living room is fine. It's just that one room is not working. I do know what the breaker box is. Okay. Now I will say 5 months ago when I had this issue, I did not know what the breaker box is. I didn't even know it was in my closet. I was like, oh, like when the guy came to fix it, it was like, where's your closet? I was like, here. And he like pulled apart the wall. I was like, holy crap. I was like, dude, it was like Harry Potter or something. I discovered a new world. I was like, oh, wow, there's all these fancy switches. But now I know where it is, okay? And I tried to fix it, and it didn't work. Did not work. Marvell 227, NVIDIA 226. Yeah, it was Narnia in my closet, bro. I was like, in the closet confirmed. Yes, in the closet confirmed. Are you from this planet? Sometimes I wonder. I sometimes wonder what I did in my childhood as well. Because some of these things you guys just all know about. Like for me, I'm discovering it for the first time. By the way, I think I listened to Bohemian Rhapsody again this morning and last night. Like that freaking song, dude. Like I was just laying in bed and I turned it on. That song, man. That song. I cannot believe you guys did not tell me about that song. Unbelievable song. Unfreaking believable. The Q 730, 731. Up another 1.2%. As that is green. Okay, let's see where some of these macro headlines are coming. We're not getting anything from Iran. Wow, $700,000 call buyer for Iran, $75 strike expiring October 16th. The call buyers are coming back, which definitely shows you there's more excitement entering into the ecosystem. This is many, many versions of calls that we've seen in terms of option flow over the past couple of days. Those Nebius 380s that someone bought a week ago, I mean, those must be printing right now, even if Nebius is not at 380. SPY 778, Palantir almost at 170 or 177. Mitt never went to a high school football game. If he did, you would hear that song. That's true. I never went to a college football game either. I didn't go to a single Rutgers football game. I just never ended up going. Like, I don't know. I always did something else on the weekend versus go to a football game. I did go to a basketball game. The one basketball game I went to, Rutgers hit a game-winning 3. And it was like so epic. But you're right. They probably would play it in sports arenas. Oil, are we almost below 80? We are, wow, 80.6. Dude, everything today is kind of working, which is making me a little nervous, bro. High beta is working. Software is working. Semis are working. Oil coming down is working. The 10 years coming down. PPI was coming down. I mean, this is pretty incredible. This is pretty. What about a 1030 dip? But we'll see in 20 minutes if we have a 1030 dip. But like, I mean, it's doing its thing. I have listened to Pink Floyd before. It was a Time, I think was the song. That's their big song, Time. I heard that song a couple of years ago. That was a good song. I don't re-listen to that song, but I remember when the lyrics are super deep and I did like that song, but it's not something I listen to as often. All right, let's get an update on some of the unemployment data, and we'll see kind of how the market's reflecting some of these new surveys that are out as well. And I'll try to get some more updates on what's going on with Iran.
I always say, watch what they do, not what they say. they're not doing what they're saying they're doing. You know, we have been scouring all the earnings reports, and there was a trend that appeared on this earnings season, and that is Gen Z is spending big and strong. Simon Property CEO, they own a lot of the malls. If you look at the Juniors brands, which is targeting sort of the Gen Z customer, we've had 16 straight months of positive comps there, which is pretty staggering. If you think about a customer group that could be hit, it would be that group, and that's continued to grow. Both new retailers are new entrants in that space, but obviously the legacy retailers as well. Airbnb, again, they say that they're putting off travel, but guess what? Growth among our first-time bookers was 11%, the highest growth we've seen in 4 years among the first-time bookers. The Gen Z cohort is growing the fastest. Tapestry, we'll talk to the CEO. Growth was led by Gen Z. Starbucks, s'mores beverages are resonating particularly well with Gen Z customers. Our strongest summer coffee launch in the past several years. American Express. I mean, so it is really across the board here. Millennial and Gen Z, which make up the largest share of U.S. customer spending, remained our fastest growing cohorts.
You know what's crazy about this? The biggest bear case last year was not even CapEx. It was the consumer. Based on what these CEOs are saying, I mean, I know we have our own anecdotal experiences, but what these CEOs are saying is that consumers are spending, and they're spending in a healthy way. Now, there's probably credit, buy now, pay later. But then if you look at the credit card data, it actually decreased month over month to 22 billion. If it was at the same growth rate, it should have been closer to 32 billion. So it's one of those things where it's like, okay, if the consumer's not a bear case anymore, jobless claims were a little higher than expected today, but nowhere near anything crazy, 209 versus 207,000. And the CapEx story is strong, and you get oil to come down. I mean, like, what is the catalyst then that actually breaks the sort of macro dynamic that we have right now?
This summer, just thought it was an interesting juxtaposition, given that they are such an important now voting class. I think 50 million Americans of this, younger Americans will be voting in the midterm elections, and it's a big increase from last time. They've 28% turnout in the
they can vote. They're not voting. They're eligible to vote. There's no way 50 million of them are voting.
No, that would be huge.
Yeah.
I think
they don't show up typically. So
28% though voter turnout for young people, according to Tufts, in the 2025 mayoral election, and that was the biggest ever that we've seen. So
I mean, here in New York.
Here in New York.
Yeah.
Yeah.
So are you questioning the actual survey itself?
No,
You seem to be.
No, I'm not questioning the survey. I'm questioning the Gen Z hypocrisy. No, I'm questioning.
And we're saying that people don't answer honestly.
I'm saying that surveys in general reflect sometimes political considerations. They reflect how people are feeling, how they're sensing the environment, but they don't necessarily reflect what they're doing, which is they are clearly spending. And I think that gap, it's something we've seen, throughout surveys.
Yes.
Well, it all makes sense if you look at how they've been locked out of the housing market. They're certainly not saving for a down payment as the age of the first-time buyers has been skyrocketing. They're starting families later in life. They're getting married later in life. They're beginning to draw down on their savings.
Financial Times, Anthropic potentially is on track to reach 120 billion of ARR by end of year. I mean, dude, if they're going to put up those types of numbers, they're going to get a $3 trillion market cap, and there's going to be not that much fear about CapEx, because if they can grow at that rate, you're going to have a lot of CapEx to support all that compute.
Saving rate barely 2.5%.
And unemployment rate is higher than the national average. I mean, we do have that out there too, which is the college grad unemployment rate, which has been a big story. It's not a problem like in China or Europe, but it is higher than the national average, which is, definitely part of the story here. And I think also reflects some of the anxieties around AI that they have.
Health insurance.
Also problematic when it comes to surveys. But I think it's interesting that a number of consumer companies have been calling out this age group as some of the best spenders as well.
Again, if you're not saving for something big, you might have more money to buy a concert ticket in the
Or maybe you're not as miserable as you think. For more on today's market action.
Yo, Sarah's feisty, bro. I like it. Sarah's feisty. She's like, yeah, all these Gen Z kids that think the world is ending with their Prime deliveries and $7 vanilla chai lattes from Starbucks. Maybe the world's not ending. SPY right there is 778.23 as that continues to go green. Having said that, there is obviously a lot of resentment towards capitalism, the economy, AI right now. And I don't know, man, these midterms are going to be interesting. because I don't know if people think the Iran thing was like something that, Trump deserves all the credit for, or the affordability, which is stuff he was kind of focusing on before the Iran stuff, is the bigger issue. And if the Democrats just have a bigger pitch on affordability, maybe the House and Senate flip blue. Like if they actually flip blue and the narrative is, hey, Trump focused on geopolitical Iran stuff while we are trying to focus on, making life more affordable. I mean, that becomes a very, very different dynamic for where the trajectory of the country is going. And then obviously that's going to affect stocks because policies will be affected. I think the prediction markets are in trouble, bro, if the Democrats win. Like they are not friendly towards it. And I think a lot of financial regulation is going to change. Like this whole Truth Social, API, like all that stuff's not happening when you have the Dems in office. And it's just a question of where is America's sentiment right now? Like I look at some polls and Trump's polling at 30%. I look at other polls, it's like at 42%. I'm like, all right, well, it's definitely not like 50, 60% of people are happy with him. So what does that mean for the midterms when people actually go out to vote? SMCI 41, wow, 9% as that continues to go green. Or are the polls BS and everyone's actually thinking the economy is great because jobs are up? There's not an issue with the labor market based on all the data. The stock market's obviously up. So, your 401ks, even if you're not an active investor, you're seeing that grow. Trump makes a hell of a pitch around, hey, like if you want your kids to be safe in this country, Iran can't have a nuclear weapon. Maybe that's the narrative that like pushes through and like that's enough for them to keep the House and the Senate. Rocket Lab now almost 84. This is the high of the week that is going for right here. And I think in a couple months, we're going to find out how the market thinks of it. But I also wonder how big of an impact does it have on the market? Like, even if the Dems take the House, Republicans keep the Senate, like CapEx is not slowing down. This market is not based on the consumer. It's based on CapEx, even though the consumer is relevant. But SK Hynix 160, it's really just a CapEx driven market right now. Like every stock is based relative towards its proxy to CapEx. For the longest time of the year, if you were a software stock, your proxy to CapEx was very low because you're in software, so your stock went down. If you were a semi stock, your stock went up. Now, if you're a software stock, the CapEx is leading to productivity, and you need software to make sense of the tokens that are generated from the CapEx. So the market's a bit more friendly. The hyperscalers are spending on the CapEx. The market's a bit more friendly. Like everything's rooted in productivity, GDP growth, and investment from CapEx. And as long as that's sustained, I don't know if whoever's in office even is going to dictate the earnings growth over the next couple of years for many of these names. I mean, most of the S&P's earnings this year is from capital expenditures that are turning into investments for these companies that are benefiting from those investments as earnings growth. Like Marvell's EPS is because Google's spending a lot on TPUs, right? So that's the way this economy is right now. We've got to be right that this AI thing is really going to pay off. And as long as that's the case, I don't even know if who's in office really matters. As long as we don't stop the CapEx and like have data center moratoriums and stuff like that stuff would obviously be the thing that really stops it. Ondas had a good earnings. They just missed on EPS, I think, by a decent chunk, which is why that stock's down. But it's not like the earnings seem to be that bad. Red Cat, that's up a little bit, so it is going a bit opposite of the other drone names. What about the AI debt? The AI debt will be paid back by the companies that took on that debt if they can get an ROI. So the $100 billion in debt that Google has for their AI build out, I mean, they're going to pay it back over the next 50 years. If they can't, that's going to be an issue. But as long as they're receiving a return on investment, the debt should not be a concern, right? It really just comes back to, like, what's the next big thing in AI? 2026, we had agentic coding. That was it. I mean, if we're going to define 2026 in the world of AI, it's agentic coding. 2025, I mean, Opus 4.8, and I'm saying that as a category of like an LLM that actually became usable. Like 2023, the LLMs weren't usable. They hallucinated. 2024, it was like you just started the CapEx to even train the models enough to think that you could really use them. 2025, I think Opus 4.8 kind of changed the game. And it was like, okay, this is legit. Or I think it was 4.7, one of those. And then 2026, the piggyback up from that was agentic coding. 2027, we're going to need something new. It can't just be agents. It's got to be It's got to be some. I mean, I want to say physical AI, but I don't think that's happening next year. I think robotics is more like a 2029 inflection point. FSD is amazing, but it's just not taking off massively. I think NVIDIA's trying to do that with Cosmos and Alpamayo and really trying to get self-driving to be a thing, but it's not a thing yet. SMH up almost 2% today, almost back to 600. Yeah, consumer agents. Look, if Apple could just stop, here's my prediction. The foldable phone, I mean, it's not really a prediction. I've said this over the time, but the foldable phone from Apple will flop. I'm saying it right now. It will fail. It will not work. They will not sell that product meaningfully. If they could just focus on actually building agentic services for the 3 billion people that use their products over a foldable phone that I am predicting, I'll eat my words if I'm wrong. I am predicting that product will not sell. I think that could be the thing that gets us into actually having a super smart assistant that handles your life and makes you more productive, which should help the economy. You're going to need a lot of CapEx for that, but you're also going to have a fundamentally different interpretation and role that you play with AI. Like if you go on the internet every morning to get news updates, if that changes from going to, I don't know, whatever news source you visit to talking to your AI, and that AI is interpreting the news for you and giving it to there's just so many different ways that you can see that agent taking over previous forms of technology you were using. And if that's done via Gemini or via Siri, that is going to create a lot of compute demand, but it's also going to create a lot of potential SMCI 42 now, 4150 for the next evolution of where AI is going. But instead they're focusing on a foldable phone. Yeah, 100%. The foldable phone is going to be like the Cybertruck. And I want to buy a Cybertruck one day. I saw one yesterday. I was like, dude, this thing, it looks sexy to me. It looks, I love that design. I know a lot of people hate it, but that thing doesn't sell. I think the year it came out, I remember seeing a bunch of them on the highway. Now I barely see it, which is why yesterday I saw it. I was like, oh, wow, a Cybertruck. I feel like I haven't seen it in months. It just didn't work. Cool. The foldable phone probably will feel cool to play with, but it's not going to work in my opinion. And imagine if Tesla actually made something like the Model Y that or even something that could sell half as much as the Model Y instead of focusing on a truck that no one wanted. I feel like Tesla would be in a different position right now. So I think that's what we need to get AI to really start getting more momentum. Zeta 2880, Airbnb as well, 182, as that's getting some more love. Foldable iPhone will create an upgrade super cycle. I just don't see it, dude. I don't think it's going to happen. If I'm wrong, I'm wrong. Look, if I'm wrong, I'll happily be wrong because, a new iPhone upgrade super cycle, forget Apple stock. It's bullish for so much of the economy. So many vendors, suppliers, it's just good for the economy when Apple is selling hundreds of millions of phones every 90 days. I just don't think the foldable one is going to be what makes that happen. But we need something new in AI. And Jensen has said this too. Jensen has said this in previous. He's Jensen consistently is saying we need, new versions of ChatGPT moments for XYZ to emerge because that creates more demand and that creates more opportunity to really see what do we do with this technology. We are in the very early. The internet again. The internet became massive. Amazon, Google, Facebook, all this stuff was built because of the internet. Where does that go in 10 years when it comes to AI? Okay, Robinhood's venture fund is officially out. Robinhood Ventures Fund 2, it's up 1%, which means they offered it at what, $22.75, up at 23. So this is a better performance already than the first venture fund, which was down 15% on the first day, but it ended up going up 100%. It went from a 22.50 to, oh wow, never mind, it's corrected. Yeah, it was at $50 at one point, right? It got to 77. Dude, that's how crazy May was. People were paying $77 for Robinhood's venture fund. Now it's back at 29. All right, so RVI too. You have to really be bullish on these startups to bet on it. And again, it's just going to take time for those startups to play out. Thoughts on Dutch Bros? They had a really good earnings, but conventionally, the stock's a little expensive from my understanding. But they're growing at 30%. I haven't done a lot of DD. I know Matt likes them. So it's interesting. I just never even tried their product either. So that's something I would have to do. But, they're growing earnings and they're growing revenue. So then it's a question of, what premium do you feel comfortable paying for them? Do you like Soxel? No. I mean, unless you're like trading it, it's 3x leverage semis. Like it feels great today because it's green, but I mean, where was this thing in May? Let's see. This thing got up to freaking $302 in June of this year. Yeah, I don't mind holding this for like a multi-month swing, but you just got to be positive that the semis are not going to have a correction or any level of weakness because it's 3x levered. Like any swing could just take it out really badly. So I don't know. I would avoid it. You can buy some high beta stocks that will obviously get the momentum, but the 3x lever up, you've got to think we're at like the time to buy that really was July 29th. That's when I was like, okay, that makes sense. Like TQQQ, same thing. Now that we're up a decent chunk from then, it's hard to bet on the leverage names. Are you in Zeta? Yes, I'm in Zeta. They had a great earnings. I think this thing is going to break above 30 relatively soon, but it's going to need a good software day and probably a catalyst to make them move up. Tesla needs an SUV and legit commercial utility vehicle. I agree. I agree. And if they could get that, but I don't think Elon's even focused on that anymore, right? Elon's totally focused on Optimus and SpaceX. Notice Elon doesn't even talk about FSD anymore. Like I never see him like talking about FSD. It's always orbital data center. It's like, it's just, I think he's also moved on to like where the real growth opportunities are. And that's what he should be doing as a CEO, but FSD is not, the future of Tesla anymore. It is a future, but it's Optimus that really matters. Nabi is 272. Is that high of day? 272.95. Yeah, we're basically there, folks. The all-time high on this was 298. I mean, if this thing really makes a run for 300, it's going to be freaking incredible. SPY, wow. 40 cents from 780. SPX is already at 780, but SPY right there, almost another 20 cents and you're there, or 40 cents and you're there. Look at the stock draft. Let's pull it up. We haven't looked at it all week. I'm pretty sure I'm still last. Yeah, I'm still last. We are recovering though. So my beta at the top in this stock draft bought all the high beta semiconductor names. NVIDIA and Apple are the only green. Google, unfortunately, is red. GEV is recovering. A lot of these names were down 20%. They're starting to recover. Reddit, I don't think that should be down that much, but Reddit's down. Fix, Texas Instruments, that's going to require more of the AI build-out momentum coming back. Rocket Lab fell off a cliff. Galaxy had some good updates this week, but unfortunately, Neo Clouds that are less quality aren't getting that love. Bloom Energy down 25%, then SanDisk down 35%. Tanner is up, I think, the most. And so is Matt, although Matt's SpaceX short is now under a little bit of pressure. Why is it not loading? Oh, we got an error. We got to tell the milkman about this. You guys see that, right? That's not me. Okay. Well, from what I remember, it's Tanner, Steve, Matt, or it might be Tanner, Matt, Steve, Chris, Jason, me. So that's the ranking that we have right now. And look, again, the problem is picking those names when we were at the highs is just like, it's going to take a lot for them to recover just to break even, which is the issue. And I think, theoretically, that's what a lot of people experienced practically with their real portfolios, not their fake portfolios, in June. And it goes to show how less momentum we've had compared to that, and how much more we have to actually rally just to break even, which means some of these names are still at relatively attractive prices, given the drawdown. S&P 779 is what we have right there. Rubrik, dude, this thing got destroyed in the SaaS sell-off, and it has made a recovery. Fell to $42, now at 102. Sam pitched this name, I think, 3 months ago when it was around 80, then it fell to 40. Now it's at 102. So you have to kind of DCA to get the alpha here. But man, you've had some software gems. Obviously, the cybersecurity names, Palantir, Sade, a lot of these software names, ServiceNow, 80 to 120. They've made a pretty big move. Credo's up 5%. That's green. Yeah, Neil does own this one. I mean, many of these different names holding on. CoreWeave, is that selling off a little bit? A little bit, a couple bucks. Well, 117 to 111, but still up 3% on the day, breaking through that 110 level that it couldn't break yesterday. 779 right here on the S&P. All right, folks, it is Thursday, so let's bring someone onto the show and get some of their thoughts on what's going on in this macro environment, particularly for semis. I think this guy is already planning his September vacation, his October vacation, his November vacation, his December vacation, January, February. Might as well take the rest of his life off based on this rally. Ladies and gentlemen, what's up, man?
What's going on, man? Good morning. Good morning.
I'm right? You're planning the vacation.
I think most of those are actually booked already, so no more planning.
Well,
I'm very grateful, and I enjoy life, but yes.
Well, dude, you deserve to go on vacation if you're heavily buying some of the names that are getting destroyed, because you get the reward for taking on the risk. So before we get into some of the specifics, just give me your kind of macro perspective on this semi rebound and what do you think was the? I mean, it feels like even Jensen's 500 billion wasn't it. It was CoreWeave and Nebius that really caused momentum to come back.
Yeah. I mean, today we got a pretty cool episode. Let me just say, chat, Amit complained to me. He complained to me. He said, Jose, you have too much time in hands. You come every week and you say nothing worries you about the AI cycle. So I was like, all right, Amit, I'll change it up today. I'll bring a lot of new different names that I don't talk about too much. So no more diamond hand Jose's. We're going to talk about different sectors and different markets. Hopefully, provide a lot of great value. But overall, man,
first of all, that's not how the conversation happened. What I said to him last night was, Jose, you talked about NeoClouds for an hour on my channel. So tomorrow morning, let's talk about something different. And we are going to talk about something different that I think a lot of you guys will enjoy. You still going to handle those names.
I just like to turn the chat on you. It's too fun. Obviously, I love this guy. Yeah, I mean, it's interesting, though. I would say it seems like this run has really been on the NeoCloud space right now. And not like your main chip players. While you are seeing kind of green on the big semiconductor names, the ones that are really rallying today, or these past few weeks, have been those NeoCloud names. I mean, CoreWeave earlier today was up, I think, 7%. So was Nebius. So was Iran. We got that great news for Iran earlier this morning.
On confirmation. Iran is a big name for you. I mean,
yes, yeah. I didn't know you own it. You own this one, right?
Yeah, I own a small position at 43, but I think you've owned it for a while now.
Yeah, nothing to. No, I would say probably my cost basis is probably around your level too, around the low 40s. But yeah, I mean, everything seems to be strong. I think for the whole industry, you're getting this new confirmation that older AI chips are still strong. And I think that's a very important thing to remember, to notice, because it gives you this validation that AI chips, you can keep buying them and they'll still provide a great ROI for your customers. So it becomes stronger for semiconductor players, but then it becomes stronger for the CoreWeaves or the Nebius or these that, while they have this model of chips depreciating over time and the value of revenue reducing over time, that doesn't seem to be the case as of now. So it's not always going to be the case. And hopefully investors should remember that it's not always going to be the case where you're going to see these premiums on GPUs. But I really much believe in the short term, within the next at least 12 to 18 months, you're still going to be very much with very strong GPU pricing. So anybody who has GPUs right now will be able to get better margins than they originally expected.
But what did Nebius and CoreWeave say to get the market to get this excited again about the AI trade?
I would say for CoreWeave, it's very minimal, but the quarter before this, they mentioned that quarter was going to be the bottom for their margins, and they were going to have this inflection point.
Yeah.
And while margins, if you look numerically, percentage-wise, I think it went from 1% to like 5%. But still, you saw that turnaround. You saw it. You're like, okay, they really are they gave us that information, and now we're actually seeing the data. I think we're going to continue this momentum if that trend continues. And I think by the end of the year, they mentioned low double digits, mid-teen margins by the end of Q4. So we have to make sure that trajectory continues. So I think that was the big thing from CoreWeave outside of that massive build out that they have. I think for Nebius, one of the big things was just they reduced the payback period dramatically, right? I think they used to be 2 to 3 years. Now they said 1 year to 10 months. Or I forget if it was 10 months or 8 months, but they're telling us that, look, our business is doing so well. We're going to start after that 1 year and 10 months. Margins on that data center or that contracts are insane. So it goes back to kind of that margin story. And if you're able to pay back your GPUs or your CapEx, the CapEx we built in less than 2 years, it also reduces the risk, right? It reduces the risk of your business because now you don't have to worry about some of the expenses after that time frame. So I think both CoreWeave and Nebius, what they told us is, yes, there's risk with the NeoCloud and the data center infrastructure build out, but the risk that we see now is less than what we saw a quarter ago, or what the market thought was there a quarter ago. So I think the risk sentiment shifted a little bit, at least for now. Maybe next week we can hear some bearish news on circular financing or something else that rebuilds that risk. But I think for now, they did a good job at reducing the risk, at least in investors' mindset.
So operating leverage, increased understanding of return on invested capital, and the reduced risk profile of the ability for them to, CoreWeave with the A100, for them to actually get the value off of these GPUs to you is a signal to the market that not only is it real, the usage is so strong that you should believe the backlog. You should believe that whenever they dilute, it's for a good reason, because the build out, is bigger than what a lot of people continue to believe.
Yeah, and to add to that, right, NeoCloud players has been a business, and I don't blame Wall Street for having high risk, a high risk mentality on these names, right? NeoCloud's AI factories are pretty much a new business. So I think it's great to kind of have that mentality of this could go wrong, this could go wrong. But as every quarter or we get new data, the market should reiterate its bearish thesis on it. They could still have it, but it's like, oh, now we have 4 datas or 5 quarters of, right? CoreWeave just IPO'd less than 2 years ago. So you have less than 8 quarters of data as a public company. Nebius really running an AI cloud, I think, is less than 3 or 4 quarters. So it's been while we've had this, everybody's saying that AI is crazy, and we've had 1 or 2 or 3 quarters of showing it, the more data you get, the more the market can go and say, you know what? Maybe financing on these GPUs isn't as crazy. Maybe the market is not that crazy. Maybe demand is really that. So more data points reduces the uncertainty, and uncertainty reduces somewhat the negative trend and bearish sentiment.
Well, it's working. NVIDIA 226. Obviously, the market has started to feel a bit more comfortable with this. So this is the new thing I think we were going to talk about today, which is optics. And I think a lot of people are curious. Lumentum, Coherent, AAOI. We'll start off more broadly. What are optics in relationship to GPUs, and why did Jensen invest $2 billion in Lumentum and Coherent? Why are these names becoming more and more relevant, and why is potentially that becoming the next bottleneck that the market is focused on?
Yeah, so I mean, the big thing with optics is first to understand with data centers, there is 3 ways to kind of get more compute, pretty much. The first is scale up, and it's pretty much, if you think about NVIDIA, scale up in the H100s, you had 8 GPUs that were able to talk to each other. Then you had NVL72. You had 72 GPUs talk to each other. Now you have, with the Kyber, I think it's going to be 144, I forget, but it's going to continue to go up. So you're seeing the scale up per rack, the density of compute. Then you also have scale out, and scale out is when you have one server, and this is very top level, when you have one server and you want to talk to like another rack and another rack, you're scaling out. Then you have scale across, and that's when you have a data center, which has a lot of AI servers, which has a lot of chips inside Interact. You want to talk to different data centers at the same time. And currently, in the current dynamics that we're in, with a lot of these approaches, copper has been the optimal choice. The reason copper is the optimal choice is, I forget the actual length, but if there is a certain length where copper just makes the most choice, cost efficient wise, performance efficient wise. But after you start to get after this length and this amount of bandwidth, you start to shift the needs to optics. And Jensen has talked about it in the place where there is a time where certain people don't need a scale up or scale across or scale whatever to the optics needs. You can still have a very heavily copper market, but you also need an amp of those big players that want to scale it massively. And that's where this optics push is coming. I think NVIDIA eventually wants to do to like NVL 250 something and 550 something. And for those solutions, it's going to be great for inference. It's going to be great for training. It's going to reduce total cost of ownerships dramatically. It's going to reduce the token cost dramatically because you're serving it, but it does come at the need of optics. So that's where the optics is needed, right? In this massive need where future innovations is happening.
Which
Now
is
the
a way
bottle-
for light to travel through the GPU, correct?
Mm-hmm. Yeah, I mean, because at the end of the day, right, light is one of the fastest things available. So these GPUs need to talk back to each other. They need to send data back to each other and all that. The quicker you can do all that, the more you reduce your total cost of ownership. Because if your GPU can send out more tokens per second, per minute, per hour, because you're improving in whatever ways through networking solutions, now the more revenue you can collect out of that GPU, right? That GPU becomes more efficient. So that's kind of like the top level of optics. Now, the main shortage with optics is they do use certain materials that are very limited in forms of manufacturing. And these lasers, not many people build them. I have some notes here. I mean, like you mentioned, a lot of big players have already talked about the market, but the biggest thing is demand is not the issue. Right now, the biggest issue in this market is supply. You can't supply the amount of lasers that are needed right now. And all these players, very similar to like the memory, all these players are increasing manufacturing capacity, but a lot of that capacity still isn't expected to turn on anytime soon. Lumentum continues to say that this is kind of a secular industry shift. As AI compute workloads increase in both speed and bandwidth, you're kind of hearing the same thing from Coherent. I think they reported yesterday. Applied Optoelectronics pretty much mentioned that they're bounded entirely by production capacity. I think the CEO of Coherent yesterday was like, I can't think of a supply line that isn't working at full capacity right now. Like that every supply line that they have is pretty much, they're sold out. I think Coherent mentioned sold out 2027 already. They're looking into 2028. Kind of like what we're seeing in the memory space, but in the optics world. And a lot of bottlenecks are happening here in this overall space.
So, okay, given that type of bottleneck, the Lumentums, the Coherents, the Applied Optoelectronics are really important. Are you excited for any of them? Do you have exposure to them? And how would you want to position to get exposure?
Yeah, so my main exposure is through 3 players. So when I think of optics, I don't think of it as an individual optics play, but I think of where the top market that they're serving, and that top market that they're serving is networking, right? Networking is where we see this. So I focus more on the networking plays and see which ones have optical plays with it. My 3 optical names that I'm working with or invested in are Marvell.
Yeah.
So many people just like Marvell for the ASIC space, where we know they're building chips for Trainium, but they have a lot of networking solutions on both scale up and scale across, scale up and scale out. Then you have.
Is this also why Jensen said Marvell is going to be $1 trillion, because there's so much demand for the efficiency of light passing through the GPUs and talking to each other, that if Marvell is like one of the big players there, they like if NVIDIA goes to 10, 15 trillion, Marvell should go to $1 trillion, right? Do you think
so that was many people were wondering, why did Jensen invest in Marvell if Marvell's designing AI chips for other companies? That seems extremely weird, but it's mainly the networking side, which you were talking about. It's and also they're also part of this NVLink Fusion thing, where you help connect ASIC to NVIDIA's ecosystem. But with that interconnection, you have a lot of networking plays as well, right? And there's a lot of different products within the networking play. But Marvell has that networking sector that they're also focusing on optics. The other one that I tend to focus on a lot is Astera Labs, A-Lab. That one is more scale up in the solutions, but they've made a few acquisitions of optics companies to be able to improve that solutions as well. And they're also working, I think, in other markets. And the third one, many people think of it as not an optics play, but it's Credo Technology. Credo is mainly known for their AECs, which is active electrical cables and primarily copper base. So everybody thinks, oh, copper-based Credo is going to fail. Actually, the market seems to be liking it now. But they've also made acquisitions in the optic space, where I think they're going to call it AEL's active, or I forget what the new, it's kind of like an optic-based cable that's going to help with a lot of these other solutions. If you want direct plays, Light and Lumentum, obviously, and Coherent seem to be some of the top plays right now. And both of them pretty much all say the same thing. Supply constraint in the market. They've kind of give us guidance of the upcoming. And within the optic space, I don't know if we want to get into them, there's like different opportunities, right? There's CPO. What else do we have here?
Optics.
Yeah, we have NPO, which is near package optics.
Yep.
And then you also have the transition of 800 gig solutions to like 1.6 terabyte, which is kind of like the big thing happening in 2027. For timelines, I think Lumentum is really producing that, having first real revenue later in the next few quarters. So within the optic space, you have all these different markets, right? You have, and there have been some Substack releases, and that was a big question in a lot of these earnings of, hey, is CPO really delayed? And all CEOs have said no. I mean, what we're actually seeing is customers are actually pulling designs ahead of schedule. The demand continues to increase, and we do believe, for example, Lumentum believes CPO is expected to be in the second half of calendar 2027. So a lot of bearish theses are coming out here for the CPO market, but I guess what we got from the optical CEOs is that everything they see is fine. But who knows? Maybe they just have to say a lot of that.
Do you think the copper trade, because it has done well over the past year, is done? Do you think there's going to be more demand for copper, or if everything's shifting to optics, at least the data center copper demand is not really going to be as aggressive as it was a year ago?
I think running optics, I think copper play is still going to be very important. I mean, even if maybe say data centers, big data center companies are going to shift to having these massive compute structures, enterprises are still going to wake up into the AI revolution. Like they don't a lot of private owned infrastructure still hasn't built out on the AI space. And those are not going to need these crazy optics networking speed. So they're still going to need massive network copper solutions. Jensen has also mentioned copper is going to be needed wherever it's useful. And I think it's going to be useful for a very long time. I don't follow the copper ticker or whatever, so I don't know if it's like run up like crazy or if it's a pullback. But in any crazy negative bearish sentiment on the copper space, I would probably think it's a opportunity of too much fear risk, because copper is still going to be heavily needed in this story. It
was one of Druckenmiller's top picks early in the year, because he thinks like, there's still going to be massive demand to build out these data centers with copper. So that's a fair point. I think that's actually very helpful to understand optics. And if there's any questions in the chat around that, you can put that here. We'll have Jose on for another 5 minutes. But like just getting a primer on like what is needed in these picks and shovels after the deleveraging has happened is really important, because when everything's going up like crazy, it's like, oh, Lumentum, I don't know what the hell they do, but I'm going to buy it because it just, but now it's like, okay, it's corrected a lot. What do they actually do? Why are these guys irrelevant? And it gives you a much better understanding, or more Marvell, right? Like, why is Jensen so excited about it? I think having the overview on that makes sense. The memory names are running again. Do you at all feel like you need exposure to memory, or the neoclouds are better for you at this moment?
Yeah, to me, no. And again, I'm not for any complete bearish reason. There's just so many bottlenecks in this industry that you don't have to chase them all. Right? I mean, we just talked about networking plays. Marvell, Credo, Astera Labs have done extremely well, and I'm pretty sure a lot of all the memory names have done well. And there's other markets in the equipment players, right? Equipment players are running. So I think it's find an industry or create an ETF basket. But for me, I find an industry that I can really focus on. And because one of the things in my investment process is try to reduce emotions out of a trade or out of an investment. And the way I can reduce emotion is by knowing as much as I can within that sector. So when CoreWeave and all these Nebias or these neoclouds go down, I would say I have true diamond hands, and it's because of that. And I feel like if I spread myself too much into all these different markets, I would have to spread my limited brain capacity into all these markets, and then doubt and uncertainty starts to fuel my portfolio. And that's when I'm like, maybe Michael is right, bearish on all these segments. But to me, that's why I don't really focus on everything.
That is a fair point. I think that's what the software folks had to deal with for the past 6 months, right? If you're buying software, you had to believe like Shopify was not dead at 100 in order to continue that conviction. What do you think about Nokia in regards to optics? Any perspective there?
I don't know Nokia too much, unfortunately, Amani. I do believe Nokia is also working with more the networking side of actual, I forget, IRAN.
AI
networking. Yeah, AI, IRAN. Yeah, there we go, that aspect. That's a market that maybe I can do more research, and we can talk about that next week or the following week, because I know there's a lot of interesting plays around that market right now.
Top conviction pick over the next 6 months, if you had to pick one name.
Top conviction, 6 months is short time, but if I had top conviction, save NVIDIA, no doubt. Top conviction, high risk, high reward, CoreWeave for me. And top conviction, I just made up questions here. So top convictions, huge opportunity in face of risk and valuation, Meta Platforms.
Yeah, Meta. Can we talk about that real quick? You're buying it heavy right now. You like Meta here.
Yeah. So I'm not buying right now. I was focused heavily in heavy beta during this downturn. So I am kind of out of cash for now, unless I decide to do some leverage but I don't know. Meta looks very attractive. I mean, I feel like the market has completely. We've heard from SpaceX, we've heard from Nebius that short-term contracts are highly valuable. Meta has says they don't want to do it, but if they ever go and say, you know what, I want to rent you out something for 3 to 6 months as I work my AI story, and their AI story is going pretty well, I think the market's going to love that dramatically. I think forward valuation is still sub 20s, which is crazy. I know, again, I think many people hate Mark or don't like his leadership. I believe his vision in the AI story, and I believe his vision in the AI investment.
By the way, speaking of Meta, Bill Ackman just said, we love that we're getting the opportunity to buy Meta at a large discounted valuation. So, yeah, Ackman.
I mean, they're cooking with their AI models. And one thing Mark mentioned is the highest margin of AI infrastructure is owning the infrastructure yourself and being able to sell the intelligence.
Right.
The only way you can sell the intelligence is if you have great models. And we see them doing extremely well with the recent releases. So who knows? Maybe next quarter we actually start to see some margin numbers on them selling intelligence, and he can go and say, "Look, this is why we're not selling the compute, because the margins on these intelligence on these tokens is beyond what you guys thought it would be."
Any small caps that are interesting to you right now, or like sub $20 billion companies?
Oh man, well, I mean, not any. Equipment players, let's just call it that. Equipment players, anything sub 10 billion is where I do believe a lot of opportunity lies right now. So we did end up picking up during this downturn Airtest Technologies. One of my first buys after buying it in the low teens. It dropped to like 70, 60s. Now it's back to 124. So Airtest Technology, I wouldn't touch it right now. The other one is a sub 1 billion. I don't know if I want to say it, but overall, to my opinion, any stock that is in the equipment player that helps improve somehow the yields of your chips is very crucial in this space where the last thing, and the last thing a company like TSMC wants is build the chip, stack HBM on it, because HBM is so expensive, and then in the final process, figure out that the chip was broken, and they could have found out that the chip was broken in step one, and now they have to get rid of all this expensive HBM, and they reduce their advanced packaging capacity dramatically. So any company in that market that can somehow help find a defect in the chip right away, either being in wherever process, I think is extremely valuable right now.
That's a fair point. It is a fair point. I mean, if we're going to get these data centers up and running, actually making sure that they are ready to go when it's time for them to come online, I think is going to be one of the biggest issues for NVIDIA suppliers. And that's what Jensen has talked about so much, which is why he's getting ready to invest. I already asked you yesterday about the 500 billion. Obviously, I think you think it's bullish because it's just more and more momentum in the ecosystem. In general, last question for you. And again, Jose's YouTube, Twitter, and his newsletter I'm putting in the chat. You guys can follow him on those platforms. Do you think this is a little euphoric, everything we've seen over the past week, or do you think it's much needed after July? I mean, I don't think anyone wants to buy Nebius at 270 for it to go back to 180 again, right? So do you think that possibility is still there?
I do. I think the volatility in this market is going to continue. And for me, I like it because it does give me the opportunity to build up cash over weeks or months where maybe we have these euphoric moments right now. And I think volatility will continue. But I do think it's very much needed. I mean, we had a crazy, stupid rundown where the market was completely stupid, putting some of these stocks at crazy values. I don't think we're there yet in the bullish side, but eventually the bulls also become extremely too happy, right? I don't know. I haven't seen too many screenshots just yet, but we know
they started this morning. I was seeing them. They started.
I'm not looking, so I don't get the feedback, the curse until I see them. So maybe I'll just shut off social until then. But yeah, I mean, expect volatility in this AI market. When this is a market that every other week you're getting a new AI model, where every other week you get some company hacking someone, when every other week you get a top player from one AI model leading to another AI model or starting a new AI company, you're gonna get volatility, because at the end of the day, uncertainty is what drives the volatility, and the AI market is filled with uncertainty.
It's a fair point. I think it's very, very well articulated around what to expect in this market. And at the end of the day, I think as investors that are investing in any of these names, you have to embrace that volatility. Jose, thank you so much. This was super, super helpful. What the Chip Happened, that is Jose's newsletter. You can check out the website, subscribe, get a lot more exclusive access and information from Mr. Jose. And yeah, we have NVIDIA coming up in a couple weeks, so we'll be live covering that together.
What happens first? NVIDIA hits 250 or Amit takes me to the dinner he promised? I don't know. I don't know what happened. All right, guys. Peace out.
Later, man. All right. So that is what we got from Mr. Jose. Databricks just raised $5 billion at a $190 billion valuation. As these guys continue to not go public, but they are raising money. Seeing a couple red candles come through. But obviously, we were up a lot on the day. So Lumentum flipping red right there. Corning flipping red. Micron having a great day. 956. I mean, that's like less than a couple percent away from back to 1,000. So you could see that happening relatively easily. And I think psychologically, that'd be really good for Mr. Micron. 956 right there is what we see. CoreWeave 110 still holding it. NVIDIA 225. Are we still at 270 on Nebius? Lost 270. Got to 275, 266, still up 3%, but definitely above 250, which is nice to see. I think me and Jose are the same height. Next time we're in person, we got to figure out. I think we're pretty much the same height, though. Maybe he's a little taller than me, maybe, but I think we're the same height. Marvell, that's up 5, almost 230. Robinhood losing 100, but still up 3% of the day. Rubrik, nice little 4% move. And then IREN up 6%. I don't see any massive macro headlines. You had one of the Fed members say, Barkin, we don't think the labor market is very strong. We agree that there's too much forward guidance. It's helpful to policy if markets understand the Fed's thinking. the U.S. labor market is vulnerable. He said his headline quote was, "It's hard to know whether rates are restrictive," which is kind of what Hammock said yesterday. Let's listen to Bank of America and get your perspective there on why they continue to think we need to raise rates. Because, again, they're calling for 75 bips, which means they don't think 1 is enough. They think it's 3, and they think if we don't do it soon, we will have a big inflation issue going into next year.
It's pretty simple. Compared to a year ago, the unemployment rate is down, inflation is up and further away from target, and yet the policy rate is 75 basis points lower than it was. So that doesn't make sense to us. We think they need to take back those 75 basis points of cuts. They were hedging against downside risks to labor that didn't really materialize. And we think, given where stocks are, there's no sign that financial conditions are particularly tight. Feels like policy rates should be higher.
So let's say that's a given. That's the case. Policy rates should be higher. Do you think that will happen?
We think it will, because if they don't hike, then I think we'll be facing a fairly challenging situation a few months down the line. We know there's seasonality in the data. Every time we come around to this time of the year, things look a little more dovish. At the start of the year, job growth is stronger, inflation is higher, things look more hawkish. The difference this time is that the 30-year is already at 525, the 10-year is at 470. If they don't hike now and the data turn hawkish again early next year, they're facing a very serious risk that the long end could get unanchored.
Okay, I'm with you. Until this data point, the jobs number was a disaster. Now, you could say it was a one-off and everything's fine. Unemployment rate ticked lower, but under the surface, something else is happening here. So hiking into that could be problematic.
I'm going to push back again.
Please.
I don't think the jobs number was a disaster. The Fed has told us, and I absolutely agree, that break-even job growth right now is pretty close to zero. The labor force is barely growing. In that situation, you're going to get months like this. And then there's the seasonality issue, where we know that the data are a little bit softer on this time of the year. If you average over the full year, we're still growing around 50,000 jobs per month, which I think is absolutely fine, and the unemployment rate's falling.
So you think the market's going to test the Fed at this point? I mean, the Fed has to prove itself.
Yeah,
Yeah.
I think so. Yes, exactly.
So let's say at the next meeting they don't hike.
Yep.
I mean, when do your forecasted 3 hikes, when do they happen? When do you think they should happen?
We have them happening in September, October, and December. Admittedly, there's uncertainty around the timing. There's many permutations. Certainly, if the inflation data are soft over the next couple of months, they won't go in September, and they might start later. So we're open-minded to that.
So just coming back to this pressure on the Fed again and on
Yep.
Warsh,
Yep.
I mean, do you think because of the midterms that there's just so much political pressure for them not to hike?
Right. So I don't think they'll start in October. That's too close to the midterms. If they've already started, they might continue in October, but I don't think they would insert themselves into the conversation
That's
6
it.
days before the midterms. Yeah. So either start in September or start in December.
Well, how about the argument that a big driver of inflation, oil prices, energy prices, they will fall off, that those will dissipate, that the impact of the tariffs will roll off as well, and so therefore we won't have as much upward pressure?
Right. Great question. So we're not focused on headline inflation. We knew headline was going to go up and then come down pretty fast. It's about the core. On tariffs, actually, the 12-month impact of tariffs is probably a little bit lower than it was at this time last year. So tariffs are already rolling off.
Ah, so we have a bigger problem than we think then.
We have a
For
bigger
anybody-
problem
yeah.
than we think. So here's one way to think about it. 3.3% core PC inflation as of June. We think about 40 basis points of that was tariffs, 20 basis points was Iran, and about 20 basis points will get revised away in September. So if everything goes right for the Fed and nothing goes wrong, and that's not how life works, but if everything goes right, you're still at 2.5. That's a pretty big overshoot when the labor market is looking basically in equilibrium, right? So policy should be a little restrictive. We don't think it is. That's why we think they hike.
That's why the market pumped last Friday when the labor market data actually came out worse than expected, negative 23,000 versus 80,000 jobs expected, because the market was like, okay, cool, the labor market's having issues, which means the Fed has to think twice about hiking. The better the job reports, the worse the chances are for the Fed to hike. Even with all of his analysis, I still don't think you get 3 hikes. Look, I think you can get 1 hike this year if the Fed members become overbearing and Warsh can't do anything about it, because at the end of the day, he's just one person. But I think if oil gets down to 60, I think it's going to be really, really hard for the Fed to be that prone to do it this year. Maybe in 2027 if inflation is still structural and lingering. But we get oil down from 85 to 60 and stay there for a couple months, which is what I think Trump is trying to do now with this war. I think we avoid the hike this year. And the Fed future probabilities have completely decimated over the past 2 weeks in terms of the potential for a rate hike in September. So the market's also thinking that. Obviously things can change, but as long as that kind of stays the way it is, then maybe we don't get that hike. I'm looking at the SanDisk quotes from the event. They're pretty much saying everything they said on the earnings, although you are seeing a move above 1400. So there's got to be something that they just said that the market's happy about. But everything I'm looking at is them talking about their TAM, talking about their pricing growth. A lot of this stuff was already answered on the call, on the earnings. Sometimes maybe the market just needs to hear it again. But on a day where Micron's running, then it also makes sense. Yeah, I'm not seeing anything totally different from what we saw in earnings. But market's excited about it. 1450, and then Intel 106. Again, this name is just taking a really ugly drawdown, so I think there will be some buyers stepping in as they continue to expand and use the capital they're raising to grow. All right, folks, I think that is it for the market open. I believe we'll have Chris on for Macro Thursday. I will confirm with him, but we don't have that many crazy earnings. dLocal, Nubank, and Applied Materials. So not really a ton of earnings to have to look for as SanDisk continues to move. Yeah, they said this on the on the earnings, if I'm not wrong. Maybe that's the SanDisk headline that's getting it to pump, but I do think they talked about that a while ago. Regardless, I mean, it's nice, this 10% on a day where Micron's getting a 5% move. A lot of these memory names, I mean, it would be pretty incredible to see Micron 1250, SanDisk 2300 again, DRAM kind of getting the exposure to all of it, up 4%. If memory actually comes back with momentum this time and less leverage, that would be exciting. But AMAT after the bell is the one that we have to look at. I actually almost bought Nokia yesterday. Where is it at? 1050 now? 1085? I was going to buy it at 1002, but Nokia is one of those stocks that doesn't let you buy in the pre-market. It's like some stocks on Robinhood aren't like eligible for that. So I ended up missing this. I will let you know if I buy the dip on this, but my average is 1390 on this. I will probably be DCAing into Nokia. I didn't do it yesterday, and then I missed it because it pumped at the open, up 5% today. But look, I bought it at around 14. I don't think anything has changed on the thesis. I have a Substack article on it. You can read it out. It's not a massive position by any sense, but it is one of those things where you look at the option flow, you look at the AI revenue growth, and then you look at NVIDIA's investment in Nokia and what they're doing with AI RAN, and then what that ultimately means for edge AI. Like, that is a sector that cannot be ignored. And I think it's a sector that the market doesn't pay that much attention to right now because, as Jose said, there's optics, there's memory, there's other bottlenecks. But I think Nokia is one of the pure plays on that sector. Now, again, the stock is not the cheapest stock out there. Still a $60 billion market cap. And they reported in July, which was a horrible time to report. That's why they fell to $8. But now that the chart is starting to stabilize a little bit, I don't know. I think this name, fair value, is closer to 17, 18 bucks, and we potentially could see that make that move. NVIDIA, are we still 225? We lost 225, but 224.60 is where we're at with NVIDIA. Okay, that is it for me today. Let's do the word of the day, and then we will be back for the close. Hopefully the energy is fixed in the apartment and we'll be back to normal. I also am not allowed to book this room twice in a day, so it's either the kitchen or the studio. You guys will find out on the market close. So hopefully, wow, memory really making it a Micron 965, SK Hynix 7%. Yesterday it was the NeoClouds. Today it's memory. Today it's memory getting a decent chunk of this love. All right, word of the day. Concrescence. The process by which separate elements gradually come together and form something new, unified, and more complex. The AI boom is a concrescence of decades of advances in compute, data, algorithms, and infrastructure. Okay. This one is a relatively simple word right here. I feel like I've heard this word many, many times. But that's what you got, concrescence.
Wow. Dude, memory.
She's coming back. She's remembering what she used to do. Get it? Memory, remembering. Off the dome, dude. Off the dome. I think of this stuff, but there you go. Look at that, almost 1,500. The website for the option flows, I'm linking right here in the chat. You can sign up to this for free. Connects to your WhatsApp. It'll give you all the information second by second on this stuff. Wow, 1485. Yeah, Micron looks like she wants 970. Goodness, dude, imagine shorting the pop on these yesterday. Like if that momentum really is, and then that the shorts have to cover at some point. When they have to cover, it just fuels the excitement on many of these names. Yeah, we should end the stream. Okay. You guys don't appreciate my humor, but that's okay. One day I will get the credit for the humor that I hopefully give to you guys. All right. Thank you everybody for being here. I'll be back on the market close in a few hours. We'll have earnings and we'll see if we can get Chris from Macro Thursday. I think we should.